Good morning. The Beaufort County Board of Education is entering a board work session, March 27th, District Educational Services Center at the Media Center, 2900 Mink Point Road, Beaufort, South Carolina. The meeting will be live streamed by the county channel in accordance with new safety and security guidelines. Bags, backpacks, and purses are prohibited by the public at Beaufort County Board of Education meetings. Public comments are limited to 3 minutes per speaker on Beaufort County School District and school-related topics. Citizens wishing to participate in public comments can do so in person or via phone. Requests to participate in public comments via phone will be accepted electronically. You can find the Board of Education public comment form on our website. Please sign up using the public comment form 24 hours from the day of the meeting. Requesters will receive a phone call during their respective public forum time and should be ready to speak. Citizens desiring to participate in person must fill out a public comment card that can be obtained from the board clerk upon arrival. And with that, we call this meeting to order.
Mr. Chair, I move that we approve the agenda.
Is it second by Dr. Carr? All in favor here, board members? Aye. Online?
Mr. Smith,
Mr. Smith, aye.
Hay, aye.
Ms. Hay,
Boatright,
aye.
sorry, Boatright, aye.
Ms. Boatright, aye. Is that exhausted? You got the number?
Yes.
Okay, it passes. Thank you. If you will join me in a pledge of allegiance, please.
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
If you wait, stand for a moment of silence, please. Thank you very much. Ms. Cushingberry, has the media been notified, ma'am?
Yes.
Okay, are there public comments?
No, sir.
No public comments. Okay, with that, Superintendent.
Thank you, sir. Today is, I know it's one of the really important work session days that we have. We have a conversation about, we call it Debt Day, and then we have a budget update. And as you know, a few other items on the agenda. But we'll begin with our Debt Day presentation. Ms. Crosby is going to introduce our financial advisor for our school district. Go ahead.
Testing. Good morning. So we are having a conversation today about debt. We affectionately call it Debt Day. We have an annual expectation of the board policy OE 6.9 through 6.17 of debt administration. So annually we come forward and identify evidence of having met those objectives and those of the policy. And so I'm going to introduce Brian Nurick, our financial advisor with Compass Municipal Advisors. He'll go through a presentation with you this morning. I'll come back, follow up with a couple of items at the end, and then we will request that there is an approval or acceptance of the operational expectation at the end. So I just wanted to prep you for that. And with that, I'll turn it over to Mr. Nurick.
Good morning, Mr. Chairman, members of the board. My name is Brian Nurick, and I'm with Compass Municipal Advisors, and I've been working on the school district's debt for about 20 years now. And I'm very, 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 say it every year, I'm very, very, very proud of this program. This year in particular, we're seeing some results of a lot of complex deals that have been completed, and we're in a phase where I think things are very more, I should say it that way, I should say it more simplistic and a little bit easier to execute and a little bit easier to explain. And I'll get into that. There is a handout that I put together. At the bottom right-hand corner, there are page numbers. So I will identify each page number as we kind of move through this presentation. I will go page by page and ask if anyone has any questions of each page, because we build off of each page as we kind of move through the handout. So page 1 here says top left-hand corner, estimated debt issuance schedule. So I'm looking at the screen here. Hey, Tanya. I think Robin has yeah. Ms. Crosby's bringing an updated version for the screen. Do you all have this version? Okay, good. Okay, so I'll keep on going here. So I broke this page into 2 sections. It's called estimated debt issuance schedule. So the purpose of this is twofold. One is to walk through the bond issues that we will issue in this calendar year. And then 2 is to give an update on the referendum issuance cycle. Okay, so we notate board approval when that occurs. We notate the issuance date and month, the series title, the debt type, and the issuance purpose. So in terms of the bond issues that we will issue in 2026, normally it would have about 5 items listed, and you can see it's been condensed to only 3 items now. And there's a reason for that, and I'll get into it in a moment. But in January, we issued 125 million of the 2023 referendum program. It was the 3rd long-term debt issuance so far out of 4. And I'll get to the balance at the bottom section of this page. So we decided as a finance committee, when we were putting together a strategy for the issuance of the referendum debt, I was asked what month was the best month to issue debt in the municipal market. And I said, well, based upon supply and demand, it would be January. Why would it be January? Well, in the prior month, everyone's on vacation. And so normally the month prior to a sale, you're doing a lot of work. You're having phone calls with the credit rating agencies. You're getting all your numbers together. You're looking at the market. You're looking at structure. And you're going through that process, and then you sell the next month. That's typically kind of the cycle. So in the municipal marketplace, because of just how the calendar works, about the second part of December, the municipal bond market kind of goes dark. And then everybody gets back in January, specifically the folks in New York that buy bonds, and their P&L starts at 0. And so they're pretty motivated to get working. Their energy levels are high. And so that month typically, in my experience, is a good month to issue just from a supply and demand perspective. But most people aren't ready to come to market. And so it times really well. The audit gets released roughly in, we'll call it November. And we can then start the process with Moody's Investor Service and Standard & Poor's on the credit ratings. They have a fresh audit to work from, and we kind of hit the ground running in January. So had a successful sale, had a lot of bids, very pleased. The market tone was great when we issued. The market tone today is not so great. So I'm happy that we were able to get that sale done. And, we'll revisit 12 months from now, well, a little less than 12 months from now, the final issuance that I'll notate in a moment. Then under number 2, in June of each year, the board takes up a resolution to approve a debt issuance through your 8% program. So it's a combination of identifying the projects. It's a combination of, are there any other residual funds left over from prior issuances or interest earnings or bid premiums? And you as a board put together your list of projects. And then we go to market in the month of August and we issue the 8% bonds. And typically the repayment is anywhere from 1 year to 3 years. And I'll get into that as we kind of build on page by page. So this year, the pro forma issuance would be $35 million that I notated. It can change up or down depending upon the board's pleasure. The third item is crossed out for a reason, and it's left there as kind of a historical reminder. This school district and many school districts across the state, when times were tough and fund balances were low, you have the ability under state law to issue a tax anticipation note. It's a short-term borrowing. You can borrow it at any time when the fiscal year begins, but it has to be paid off by April 15th of the following year. So normally what would happen is in around August, debt would be issued, closed in September, funds would be available for the general fund, and it would get you through the lean months before the tax cycle started. So usually the draws would occur in October, November, part of December, and then in December, the second half of December, usually money starts rolling in and you don't really need that tax anticipation note. It's a good measuring stick that we have some school districts that have a fund balance policy to run from or to work from, and then some that may not. They may have a practice but not a policy. So one of just a fundamental viewpoint that we took on a statewide basis is you should have enough cash to not need to borrow this. And there was a time where there was a lot of statewide political pressure on fund balances to be low. And I think it was a reasonable approach to say, look, we need to have a fund balance so we don't need to borrow funds, pay interest and fees to cash flow during the points in time of the calendar cycle where we don't have money coming in. And so I'm pleased to say that this district has not issued TAN in a number of years. Don't plan on that occurring, but I just leave it there as a reminder that you used to issue a TAN and you no longer have to do that. Moving to the bottom section, the 2023 referendum, permanent long-term debt issuances, $439,035,000. We have completed the first of three of the four issuances. You'll notate that January 2025, we issued 50.3 million. And then in May of 2025, we issued 132.2. So question, why did we issue in May? That year, January turned out to be a pretty poor month to issue long-term debt. And so we looked at the cash flow. We dealt with the bond anticipation note that we needed to deal with in January, but we deferred the rest of the borrowing until we're actually going to go in July, but month May ended up being a good time. Market came back and we decided to issue in May. So we were able to make the cash flow work. So that was the reason why we did May in 2025. So the first part in January 2025 just dealt with the bond anticipation note that was outstanding and was getting ready to mature. So we had to deal with that, but we didn't do long-term debt until May. And then January 2026, as I've already stated, we issued 125 million, which leaves a remaining balance to be issued in January 2027 of 131.5 and some change. And we'll kind of see how things continue to go forward from here. And we'll look forward to doing that final issuance, hopefully in January. And then any modifications to it will be prepared to make. So there used to be a lot more on this, refinancings and installment purchase revenue bond payments and a lot of things that have been decomplicated over time. But I'll get to a little bit of that in the next page. But before I do, is there any questions on debt issuances for this calendar year and the referendum from 2023?
Any questions from our colleagues online?
No, this is Pastor Gordon. I'm good.
Thank you all.
Okay, so moving to page 2, this is what's affectionately called the debt capsule report. And we put this together to give a snapshot of all the bonds that are outstanding that we're making payments on, and also identify bonds to be issued in the future, and then notate certain attributes. So if we just look at each of the columns and the heading, so column A is the bond series. Column B is the original par amount that was issued. Column C is the amount outstanding. Column D is the amount that's counted against your 8% debt limit, which we have a page on here in a moment. Column E is the net borrowing rate, we call it the true interest cost. And then column F is the refundable bonds interest rate. So it's the coupons that are eligible to be refunded in a bond issue. So if you issue a 20-year bond, roughly the first 10 years are not callable. So years 11 to 20 would be callable. It's called a 10-year par call. That's what we call it in the industry. Sometimes we can do an 8-year par call. It just depends on the market and the couponing. So we take that portion and it's a weighted average of what is the refundable bond interest rate. So we can kind of eyeball whether or not something is going to be refunded or not. Good example of that under column F would be the 2021A that was issued right 2021. So it was right after COVID. Quantitative easing was in full effect. Interest rate to be refunded on those coupons, 2.3. So the probability of
Just take a moment until we get you so everyone can hear. Thank you, Mr. Nuri.
Thank you. Can you all hear me? Okay. So the 2.3% that I notated, the probability of refinancing, that's fairly low, right? When you look at, say, the 2025B and the 2026A, you're looking at about 4.2%, just a little over 4.2%. So the probability of refinancing those is a little bit higher. Short-term rates right now are in the 2% range. Before the Middle East conflict, the first 5 years of the yield curve was like 210, 211, 215. So you can see we were refinancing anything that was higher than the 3% during that period. Now we're higher right now. Hopefully we'll come back down. But the probability of refunding those are higher. One of the things that I want to point out is in the first 3 issues, what I did there was I wanted to identify for the board the amount outstanding being 0. So those are bonds that were paid off primarily this March. One of them is a 2009 QSCB. So for historical context, during the Obama administration, we had the ARRA programs. There were subsidized funds. And so the district took advantage of an allocation of qualified school construction bonds. And you were able to borrow $10 million for can't remember the exact term, I think it was around 15, 16 years, and your net rate was 1.069. We structured it as one payment, one bullet payment, because why pay back 1.069% very quickly, right? You want to pay it back really slowly. But that's just an example of a historical bond that paid off this year, but was issued during the ARRA programs. So those are no longer on the books, so to speak. The second item, the 2015B refunding, REF. So that was the last eligible refunding that we notated. We actually went to Moody's Investor Service in December of 2024 to get approval to move forward. The market in January moved against us in 2025, and we waited and waited and waited. And there was a roughly just slightly less than a 2-week period in September that we hit the market with Beaufort, Horry, Dorchester 2, and we sold all of those at the same time, and we were able to refinance that. There's a notation at the bottom. It says refunding on September 9th, 2025 with a call date of December 30th, 2025. So we physically paid off the old bonds on December 30th of last year. And then the net savings was $1,653,942 rounded up. The target was 1.5 million we had with the board. So we achieved the target, but it really was the last of a series of refinancings that we took advantage of during lower interest rate markets. And so if you look now under column H for bonds that are currently outstanding, the next eligible bond to be refinanced would be in 2030. So we don't anticipate having any refinancings for a number of years, which is kind of makes it a little less complex for us to manage. So I'm very happy to say that we literally refinanced every possible bond that we could, including the old installment purchase revenue bonds. And I was here last year discussing the installment purchase revenue bonds. They were issued by a nonprofit corporation, and then each year you make 2 payments from your 8% on those. And we were very fortunate to be able to issue a piece of 8% debt and paid off in 1 payment as opposed to the remaining, say, 8 payments. And we're doing this a lot around the state right now. And I think from a most simplistic perspective, making 1 payment is cheaper than making 8 payments if you can do it. And we were able to do it here. I know your finance staff's very happy. It's no longer part of your audit, and sunset that old corporation that issued that debt. So I'm very proud of that as well. The only other item to notate is the 2026B EST stands for estimated. And so I've already identified on the prior page that we're looking at a potential 8% bond this year at $39 million. And I'll get into the structure here in subsequent pages. Are there any questions regarding this page on debt outstanding or debt that we recently paid
Good morning.
off? Morning.
Thanks for your presentation. As I listen to you present and talk about the bonds that we do have and some of the bonds that, in terms of selling or paying, with the country at war right now, and I've been watching the market, and a lot of stuff has been going up and some has been going down, and it's some of it's kind of alarming in terms of not necessarily borrowing, in terms of even selling some of our debt. How do you see that? How do you see that that is affecting us?
Okay, great question. So the first thing is all of the debt you currently have outstanding is fixed rate. So there's no change in your payments. There's no change in the there's the current, I'll call it, global liquidity crisis, right? So you're seeing right now every asset class drop. So normally in this situation, like gold would rally, it's not rallying because people need to raise cash.
Right.
In particular, on the gold example, I saw a notation that the country of Turkey sold 22 million tons of raised cash. So we're in a global liquidity crisis. That's when you see every asset class drop. Of course, over time things get corrected, right? But it's not corrected right now. The municipal bond market and the treasury market has had interest rates increase. Why? Fewer buyers, supply and demand. Hopefully, the signal of the meeting with our country and China signals a potential end date to this, and may start to get some relief. Interest rates, by and large, on the short end of the curve are still attractive. They have gone up some, but they're still attractive. They're still sub 3%. Your next bond issue is going to be 3 years or less. So it's going to be a very short bond issue. So between today and January of 2027, when we would issue the final installment of the referendum debt, which would be longer term debt, I would hope that this would be resolved and things would be calm. Does that help to answer your question?
Yes, sir. And you brought, well, and my question beyond that, you kind of addressed it a little bit, but if it is not resolved, then what is our backup plan? Because it is becoming very concerning right now. What's
That
going
is
on
a-
in
that
terms of
is
the
a-
oil as well?
That is an excellent question. So we have dealt with this before. So in 2008, 9, and 10, when we had the global financial crisis with bonds that were rated AAA that turned out not to be AAA,
Right.
the CMO, we actually had referendum debt to issue. We elected to do bond anticipation notes, which is a short-term interim 1-year financing. Let the situation calm and then go to permanent debt. So if we get to January of 2027 and the market is not good and the district needs cash to continue the construction program continuity, what we would recommend is we would do a bond anticipation note for 12 months and then revisit 12 months later if things have calmed down. So we're not going to be in a position where we're going to be forced to issue long-term debt in a poor market. Does that help?
Yeah, that definitely.
Okay, our colleagues online, any questions for Mr. Nurick at this point?
No, sir.
Thank you, Ms. Hay. Okay, Mr. Nurick.
So moving to page 3, affectionately call this the graph before the math. So the page after this is all the math that creates this graph. But this is a graphical representation of all of your current debt payments and what we project to be your future debt payments, specifically on your 8% program into perpetuity, and then the last series of your referendum. And then we notate with a nice arrow that we have strategically structured your debt to be able to complement a phase 3 of the referendum program to the extent you want a phase 3. And then it allows you to borrow an amount of money for the referendum program because we've already included your 8% program here into perpetuity. It allows you to issue an additional phase 3 referendum amount without a millage increase. So when we first put together the 2023 and prior referendums, we calibrated this entire process out. We laid out what it would look like if we did a 3-phase referendum, and we adjusted the mill rate one time and were able to live within that mill rate. It was ultimately computed to be at 36.3, which is slightly less than my original projection. I like to be conservative. And we're able to cash flow the 8% program and your referendum program within that 36.3. And we take various measures to be able to deal with events that might occur that could cause disruption to that as well. We can not issue 8% debt. We can issue the 8% debt a little longer instead of a little shorter. There are various techniques that we can do to ensure that we've got the ability to stay at 36.3 in a negative situation, because there will be a negative situation at some point in the future. The other thing that we do on terms of growth rates, we only use I'll show you here in a minute, we only use a 1% growth rate after the current year. So we're only projecting out what we kind of know is high probability, and then we go very conservative to make sure that we have the highest probability within reason of staying at 36.3 mils. So the drop off or the strategic structure of the debt is to complement the referendum program. So before I turn to the next page, which will have all the numbers behind this graph, are there any questions of this structure?
Our colleagues online, any questions?
No, I'm good. This Pastor Gordon, I'm good.
Okay, Ms. Hay.
No, sir. I'll pipe up when I do. Thank you.
Thank you, ma'am. All right,
Okay.
Colleagues here, any questions? Okay,
All right, moving to page 4. So we have a number of columns, column A through column J. Column A identifies the year in which payments are, calendar year in which payments are made. Column B are past and present general obligation bonds that were listed on the debt capsule page. And then column C and D represent the referendum issuances broken out for the 2023 referendum program. And then column E is the structure as of today for a potential $35 million 8% bond this year. And you can see that this year, I estimate it would be a 3-year term, but the last payment's fairly small. We go through a process of taking actual numbers. So every month beginning in February, your finance department reconciles and then sends me what collections have been. And we, as a team, calculate what the collectible value of a mill is from a cash basis. And so we'll continue to refine the next page I get to as we move through the tax collection cycle. And I think it's very important to note that we look at everything on a cash basis. So when you see anything that's an assessed valuation, we only use that for debt limit. We do not use it for our projections because we find using cash as a more accurate methodology. And then under column H, you can see that how we've structured the referendum issue. Final piece for the 2023 referendum would be just level debt service payments. I'll probably make a small modification in year 1 or 2 as we get closer. And then column I is the cumulative issuance of 2-year 8% bonds. And I'll identify that on the next page. Okay. We're currently getting ready to issue tax bills in the fall that would make payments in 2027. So beginning here, we highlight the 2027 year because the 2026 year is what we're currently collecting for and making payments on. 2027 year is what we're currently fine tuning our estimates for and making final plans for. Are there any questions on this page before we move to page 5, which breaks out column I?
Good morning. For the 8% that's issued for 2027, broken out into 3 years, 18, 15, and 3. Is it because of the cash flow that we're just dangling that 3 million out there? I mean, if the first year is an 18 million payment and the second year is a 15 million, why can't we just make 2 $18 million payments?
So when we get to the millage cash flow page, you'll see the math, how we back into why that is.
Sorry, didn't mean to
Great,
get that in.
good question. There's a method behind the madness, I'll say. The other thing is there was 1 year where I came to the board and said, I know you have more needs and we have this program at 36.3 and I'm looking at a 1-year payback and we probably need to fast forward a small amount of needs to stay at 36.3 because we have a long vision. And so one of the things that I've done, you can see under column D, the first, not the $3.2 million payment, but the $16 and the $15 million payment, is I want to make sure I don't come back to the board and say, hey, we're doing great and I need you to issue a little bit extra in the 8% to keep at 36.3 because we need 36.3 2 years from now. Like the program requires the 36.3 for continuity purposes. So I'm trying to balance both programs and the mill rate, and it kind of doesn't matter that it's 2 to 3 years because it means the referendum debt's paying off a little more quickly. It's just a balance between the two factors. But I'll get into the millage numbers here in a minute, and it'll all click as to why the payments are what they are. No problem. Thank you. Okay, so moving to page 5. This is where we break out future 8% issuances. So under column B, I notated that I did that on the prior page, broken out in the 3-year term. And then going forward under column C to D, I've made an adjustment to $40 million a year for the 8% program. And I have the repayment at 2 years from a pro forma perspective. Of course, it will continue to evolve each year as we issue, but I want to make sure that we have this built in on a pro forma basis. And then I can measure when you get closer to decisions regarding the third phase of your referendum program, I could then quote you a number as to how much you could borrow without an adjustment to the millage rate. Okay. Any questions on the 8% page? Okay. So moving to page 6. So there's a lot here on page 6. So this is the millage page. So this will answer a lot of the questions of why on the structure. So under column A, each of the calendar years that has a single asterisk, we take your audit, we go to the debt service fund page, we look at your revenues, and we do simple division to come up with the actual collectible value of a mill. And then we measure that to the prior year to come up with the growth rate. So under column C, you can see what the growth rate is in each particular year. I'll highlight 2024, 17.7% growth. That would be reassessment. Great thing about reassessment is your one-time opportunity to really kind of catch up with inflation. It's not going to be perfect because you have limitations on how much a home can be reassessed or a property can be reassessed, but it is really your kind of your one-time opportunity to catch up on inflation. And we all know that inflation has been pretty high. So catching up on inflation has been a very important item to identify and make sure that we're doing everything we can to provide enough money to offset the increase in costs and make sure we meet the needs. The 2 years that have 2 asterisks, 26 and 27, are items that we're currently computing and discussing. So there's a notation at the bottom for the 2 asterisks that says future finance committee discussion and analysis. So 2026, I received an email yesterday from your finance department. And so the estimated value of a mill of $3,076,000 for the debt service side of the budget, that will adjust again. So every month from here until we get to through June 30th, we will continue to revise this number as collections come in and we get a better idea of what the actual cash collections are versus the number of mills levied. That then sets up a better picture for us to know what 2027 looks like. So for 2027, I used a 5% growth rate. Now, the question I normally get here is, what happens if we have a fiscal crisis? Well, the way this works is for the tax bills that go out this fall, as of December 31st, 2025, we effectively freeze the tax rolls. And then the county has until June 30th to tell us what the assessed valuation is. So in effect, the tax bills that will go out in the fall are going to be that December 31st, 2025 number. So anything that happens after that really isn't going to affect much. What could get affected would be, say, 2028. And so if you look at 2028 and out, I have a very conservative 1% growth rate. And the reason is if you look back in 2014, when things weren't going so great, we actually had a negative integer, right? So we want to be able in this program, if we ever have another negative integer, we want to be able to absorb it and not have an impact to the 36.3 mills. Now, backing into why the payments on the 8% bond, those payments occur in 26 and 27. So if you scroll across in 26 and 27, when you look at 36.3 mills less 36.3 mills versus the amount of debt that we have to pay, you'll see that under the remaining millage under column J, there's basically zeros it out. So that's how I backed into those 2 payments. And I'll continue to change those payments as the assumptions continue to change. Then you can see in 2029, we start to open up. And that's that is funds that are available to cover phase 3 of a referendum. If you decide not to do a phase 3 referendum, I'll be back saying, hey, let's reexamine the 8% program, because one, potentially we could shorten the term. Instead of 2 years, maybe 1 year. Two, if you don't do a phase 3 referendum, I don't think the 40 million is probably going to cash flow all your needs. We might be revisiting the dollar figure. So we'll just see how it plays out. But you can see that we have capacity for phase 3, and most likely we'll outperform 1%. And these numbers will get a little bit better. And the amount that you can borrow without adjusting that 36.3 will get a little bit more robust. That's what I would hope to happen. I think it's the most probable outcome. And it's what's actually happened for phase 2. We outperformed and we were able to tackle a lot of projects. Any questions on this page? It's a lot of information.
Speaking in terms of the, if not, if we didn't, even if we didn't come out for a referendum, and which area or year, if we wanted to increase the 8% work in terms of existing structures that we have, where would you predict that we find that funding in these methods right here?
So right now, already baked into these numbers is 40 million a year. Well, 35 million for this year, and then 40 million every single year going forward. So if you wanted to adjust and go, is your question, instead of 40, what if we wanted to go to 45?
And in terms of maybe increasing the amount of work that we can get done, because when I look at these buildings and look at different things in terms of work, you know, it's one thing to be looking and preparing for a bond referendum, but at the same time, my mom would say, like, let me see how you treat this car before you get a new car. And I think that there's some work that could be done on some of these buildings before we just keep going out and doing referendums, because I think that our numbers are not, may in certain areas may not be where we can need to continuously go for referendums. But if we could upkeep and fund to fund basically sprucing up some of the bills that we do have in terms of 8% funding, where would you project that at? Because at some point in time, if like you said, if we didn't go out for bond referendum, where could we get money from to increase the amount of 8% funding that we do have? So if we did, in other words, if we didn't go out for 8% funding and we wanted to spruce up some of our buildings, where would we get that money, and when would you predict for us to do that?
Okay, so
and not be heavy on taxpayers.
Okay, good question. So I'm going to give you kind of two-part answer.
Okay.
So the first part is, part of your question is regarding existing facilities in your maintenance program. That is mutually exclusive to what my skill sets are. I don't deal with hammers and nails and what you guys actually, you know, spend the money on and what project gets done when. That's a separate department. Robert handles that.
Right.
So I'm on the funding side.
Right.
So if you came to me and said, Brian, 40 million isn't going to cut it. We need to go to 45 million. We need to go to 50 million, whatever the number is,
right,
in order to make sure that we're addressing all of our infrastructure at a satisfactory rate before we go out for another referendum. That's how I interpret your question.
Right.
So what I would do is, first, we would talk about your debt limit, which we'll get to in a moment, which you have capacity to do exactly what you're talking about. And then I would talk to you about the term of the financing. So instead of 2 years, I probably would go to 3 or maybe even 4 years to extend the repayment in order to increase, instead of 40 to say 45 to 50, 55, say whatever the number is. So you deal with what If you want more money in the 8%, the way that we would deal with it is most likely through an extension of the term of the borrowing.
Okay.
So a house is cheaper, right? If you buy a mortgage, you buy a home, it's cheaper to have a monthly payment based upon a 20-year mortgage versus a 10-year mortgage. Same concept. Does that answer your question?
Oh, that answers the questions.
Okay, thank you.
Thank you, Mr. Norick. Any colleagues online have a question? Ms. Norick, I have one if I may. It's sort of a pivot, but you mentioned collateralized mortgage obligations earlier. Out of that area came credit default swaps. Is there still a market for those created by Hank Greenberg? There is?
Yeah. There's still credit default swaps.
Okay.
I think the people that are taking the other side of the trade are probably a little more cautious on where they issue them. But yeah, yes, you'll see every now and then there'll be discussions about credit default swaps on like a single company, and then it will signal stress, and that will become the first indicator that there's stress at XYZ company.
Thank you very much.
You're welcome. Okay, page 7, constitutional debt limitation. So I walked through how the county process is in terms of a timeline of certifying the assessed valuation each year. And what we do is we take that assessed valuation, we multiply it by 8%, and then we get a maximum amount that you can issue without voter approval. And then we subtract from it bonds that you have currently outstanding, and then the 8% bonds that we project that you will issue with the repayment terms listed. So a couple of things on this page. The highlighted row would be as of June 30th, 2026. So we're estimating a 5% growth from the prior year certification, which would give us an estimated debt limit of $238 rounded $0.3 million. And then if we subtract the bonds that you have outstanding and the bonds that you will issue, your net available is $188,156,000. Now you have an OEA policy that states that you will keep 10% of the insured value of all your buildings as a reserve. That's a very only client I have that I know of that has that policy, and being a coastal community, that is a very, it's a best practice in my opinion to have that money available in case of a natural disaster. So when you look at the footnote down below under the 3 asterisk footnote for policy OEA 6.17, 10% is $132.3 million this year. Ms. Crosby sent me the numbers. So we roughly have a $50+ million delta now between the amount we have available versus the amount that we want to reserve under the policy. It wasn't always this way. If you look back 3 years ago at my presentation, you'll see it was a lot more thin. And I made some comments over time that depending at the growth rate of your 8% each year, because of the restrictions of a home can only go up 15% or a property can only go up 15%, you have one growth rate of the 8%, but you have another growth rate, which is your insured value, which is going to be more on a real-time basis. So we're still within the policy, but I'm just pointing out that over a long-term period, we may have to revisit that policy at some point in the future, just because each have a different growth rate, okay, associated with them. The other piece of notation on this page is under column I. If you notice, there are 3 instances in which we had a negative assessed valuation growth. That doesn't correlate to our cash collection, which is why we use cash instead of the assessed valuation numbers. I'm not an expert on assessed valuation. The county has a very difficult job. There's a lot of properties. There's fee in lieu of tax agreements. There's TIFs. There's just, I'm sure it's very complicated on their end. but the most accurate methodology that we have come up with over time, and that has been tried and true, and has worked very well, is to do the methodology that we are currently employing, which is we look at things on a cash basis. And then we've recently, or the last, I'd say 5 years, we started doing a monthly reconciliation, real time, unaudited cash basis analysis. And then we started rolling that concept through the finance committee and had a more robust conversation. So I just want to notate that in those two most recent years, in 2022 and 2023, if you go back one page, you're going to see on a cash basis, we didn't go negative, we went positive. Okay. But that's the reason why we like to use cash numbers for our projections. So any questions on page 7, debt limit? All right. Moving to page 8, this will be a quick page. This is simply column. So on the debt limit page, we break out the amortization on the 2-year basis, and then we have to take it out into perpetuity. So instead of having 50 columns, we start condensing under column G. And so this just shows you how we get mathematically to the prior page numbers on the repayment on the cumulative basis. Okay, so I'll go ahead and move to page 9. And this is how we approach every year's tax collection cycle and ultimately have this page approved by the finance committee, and we send it to the county auditor. So we call it a debt service fund millage levy summary or worksheet, and it mimics in certain ways your debt service fund page in your audit. So at the top, we look at what your revenues are. We start with the beginning cash balance, which will be reconciled, and we'll get a final number probably in July. Right now, estimated $7,250,000. We have an estimated value of a mill for 2027, which we identified on the millage page. 36.3 mills brings in roughly $117 million. And then we have an amount from state sources, which the majority of that's going to be homestead exemption. Important to note, those monies usually don't come into around May or June. So they're not really available for March payments. Then those dollars that are there have to cover 18 months worth of payments, not 12 months. So we break into 3 categories: the fall of this year, which will be the fall of 2026, and a total payment amount of $12,268,000. Then we identify what you would pay in the spring of next year on March 1st. That, as of right now, it'll adjust, $108.5 million. And then we look at what you have to pay next fall, September of 2027, because we have $10.5 million we have to pay, but we have no new revenue coming in after the tax collection cycle kind of concludes with the state source monies coming in May and June. And then what we do is we notate the fund balance as of June 30th, 2027, but most importantly, as of December 31st, 2027. So a lot of times in a community, we'll be asked, why does the debt service fund have so much money in it? Well, it's because you have payments that are coming right after the fiscal year that you have to budget for. So we really focus on this December 31st number, and we've always targeted $5 million as our cushion in case we don't meet projections. And so you can look at the value of a mill and say it's, a little less than 2 mills that we've got as a little bit of a cushion in case there's some type of disruption. But we break this out on a very granular basis so that everybody can see every payment that's being made, where and why, but most importantly, the cash flow. And as board members, we want you to be able to answer that question. Hey, Why is there so much money sitting in the debt service fund in your audit? Well, this is why. This page explains that. Okay. So any questions on page 9 before we move to last couple slides that kind of pull the whole program together?
Let me go here. From our colleagues online, any questions?
No questions here.
Okay. Ms. Hayes said she would notify if she had any. All right, Mr. Smith.
So you said at some point we would have, you said 18, you said we would have 18, you said we would have 18 payments? When you at the top, you were talking about when you first started on this page in terms of, I mean, yeah, excuse me, 18 months of payments?
Yes. So not 9/1 of 26.
Right.
3/1 of 27, 9/1 of 27.
And that's just, and this right here, we will be saved. That won't depend on what the market is at the time, is it? Well,
So these are going to be fixed rate payments. So
right,
the only payment that will adjust will be the gray highlighted payment. So this 2026B 8% bond that we have yet to issue,
right.
that will come before you in June, July, and we'll issue in August. That's the only payment that's going to change. All these other payments are fixed rates. So no matter what happens in the Middle East, your payments aren't changing except for the highlighted gray 2 rows. You don't have variable rate debt. So, and you're not allowed to under state law anyway. So,
Right. No,
so you're not going to have fluctuations.
I do understand, and I do understand that, but I mean, just still concerning. I know some companies in just different places are preparing because in terms of us being of some of our financials in terms of, I think in a minute people are selling. Now people are selling, trying to sell their houses because the market could get very scarce real soon. So this is people who have their house on the market are trying to get them off right now. Before the market turns upside down, which is possibly could be a prediction. So I mean, just so in terms of even collecting taxes and in terms of being able to pay those payments, regardless of whether they're fixed or not, it's just in terms of the backup plan. Where would you foresee that funding to come from? And I think that you said it, but I was kind of fixated trying to understand that. Where did you say that funding will come from again?
So the funding will be the tax bills that go out this fall. It's going to be, the tax bills go out roughly, say, October of 2026, right?
Right.
So the assessed valuations are as of December 31st, 2025. So we already know the county's doing their numbers, right?
Right.
And then the bills will go out and people will make the payment based upon the assessed valuation of their property as of December 31st, 2025, unless there's a point of sale that occurs between now and the tax bills going out. Point of sale occurs, then it's a real-time change. But that's far and few between the number of total properties in the county versus the number that you have a point of sale on. So in terms of a disruption, I think you may be saying, like, what if a homeowner couldn't pay? Maybe that's you're kind of where you're headed. We dealt with that before. So in the housing crisis, the collapse, we never missed a payment, right? I mean, we as a whole, we never had a problem. Why didn't we have a problem? Because when a house gets repossessed, the bank repossesses it and the bank makes the payment. So it's kind of the backup plan is in a lot of ways just the way that mortgages are structured. And when there's a repossession, it's a bank takes it and bank keeps the property taxes current.
Thank you. Okay.
Okay. Moving to page 10. So this is titled Funding Program Core Goals and Objectives. And this was put in place many years ago under a lot of discussion. And it's we'll run through real quick the 8% program, the referendum program, structured debt service millage rate, and then your credit ratings. And I'm just going to go ahead and read this. So funding of annual maintenance, 8% program, fund 35 million plus annually through the 8% debt limitation, subject to ongoing and inflation adjustments. We have discussed that earlier. Structure the term or repayment of each borrowing to sustain the program by providing flexibility for future program adjustments. We talked about that earlier with the terms of the 8% borrowings. Funding of large projects, referendum program. Fund large projects through referendum bonds as appropriate and when needed. Reason why installment purchase revenue bond was needed because the Early Childhood Center was funded through the 8%. And then there wasn't enough 8% funds to deal with annual maintenance. So that's the reason why we use the word large projects. It's a long-term process to get to that definition. Structured debt service millage rate. Apply forward forecasting and periodic assessments of the appropriate balance between the debt service millage rate, a refresh of ongoing needs, and maintaining appropriate debt limit availability. So we've talked about all those items individually throughout the prior pages. And what we have done is we're finding the balance between your 8% program needs, your referendum program needs, and your taxation rate. And I think the 36.3 has served you very well. And I think we'll continue to move forward with 36.3 and continue to fund the next phase of your referendum program to the extent that's the board's decision. And then lastly, managing credit ratings. Maintain the 8% in referendum programs while preserving the highest potential bond ratings from Moody's Investor Service and Standard & Poor's. Maintain an appropriate fund balance to support the AA1, AA current credit ratings. So with Moody's Investor Service, you can see I did a pyramid. So on the left-hand side, the credit ratings with Moody's are a large A and then 2 small A's for the AAA category. And then you have the AA category with a large A, uppercase A, and a lowercase a. And then you have the single A category, and then you have the BAA category. And then below that, you're outside of what's called investment grade. On the right-hand side, we do the same process for Standard & Poor's, and they use all capital letters. So your current credit ratings are a AA1 with Moody's Investor Service and a AA flat with Standard & Poor's. There's no school district in the state that has a AAA rating. Okay, so you all have very high credit ratings. There is a program for schools in the state. It's called the enhancement program. And basically, all state funds are pledged towards any school district's potential default. Program's never been tested. And it carries a AA1 credit rating. So you're equal to the entire state program for enhancement with Moody's Investor Service. Okay. So any questions on page 10?
None here, sir. Online?
None. No questions, sir.
Okay. So the last page, page 11. So what we've done here is we've broken out in a chart, and I put a red mark next to your credit ratings, but I show you all the categories, right? So you have investment grade categories from AAA all the way to the BAA, BBB. And I made some general market notations. And then below that, we get into the non-investment or speculative grade. But I want you this page, the reason it's here is to show all the credit ratings available, where Beaufort County School District is, and to have an appreciation of how high your credit rating is, but also tie it back to your liquidity and fund balance. That is the highest metric in maintaining the current credit ratings that you have. Okay. So with that, that's all I have prepared. I'm happy to answer any questions.
Colonel Guy.
Thank you, Mr. Chairman. Mr. Nurek, as you know, we are starting our budget process for the budget year starting in July 31st of this year. We're starting that now. One of the things that we have to anticipate is inflation starting, what the inflation is going to look like starting in July of this coming year. Right now, the state, the SCRFA says inflation should be looked at 2.6%. Last week, the Federal Reserve said currently the inflation rate in the United States was 2.8%. 3 weeks ago, the Chamber of Commerce sponsored an economic analysis briefing out at Data Island that I attend, and they claimed that the inflation rate in Beaufort County is 3.4%. And obviously, our inflation rate's higher than the rest of the state because of our cost of living and so on. Today, the Federal Reserve reported that the current inflation rate is 4%. As our financial expert in our planning for the next fiscal year, what would you think, what would you expect our inflation rate to be in Beaufort County so that we have at least a speed limit sign about where we should go to plan for our budget for next fiscal year?
Excellent question. Okay. So first of all, with any inflation metric, it's always the categories and the percentages. So not every inflation metric is going to be apples to apples, right? We answer this kind of in three parts. So let's talk about tariffs. So I believe I've used the analogy before, and I'll use it again, that my personal opinion on tariffs and all the economic experts out there that were giving their projections was, I used an NBA analogy. It was like a high-powered NBA offense going up against Dennis Rodman. It's going to slow down the game, lower the score, right? And tariffs are simply a tax. Who pays them is kind of a whack-a-mole game. And it just slows the economy down, and it cuts into company margins. What do? They cut labor. And so does it get passed on? Well, depends on the product. It's all very, very granular. Right now, with what's going on in the Middle East, this is not a tariff type item. The increase in fossil fuel and natural gas, mostly fossil fuel, is going to be inflation that hits us more quickly than I think anything. There is a company called Truflation, Truflation, and they do a real-time metric of inflation. They have subscriptions, and then they post their inflation data that you can see for free as well. It is a real-time adjustment. That's where I go to look at inflation data, and you can break it down by category as well. There are knowns and there are unknowns. So this question is sort of like trying to figure out an unknown, but we have to have a number. So I would look at, as you work through your budget, a range and take the higher end of it. I don't think with what is currently going on, I don't think there is an easy fix. And to the extent there is one, there's going to be a cascading problem. And we talked about a little bit yesterday that let's just say this conflict ended tomorrow. Every country that's low on strategic reserves is going to do what? Buy. And that will push prices up temporarily. So I just do not see an easy, wonderful fix to what I consider to be inflation pressures that touch almost every product and service.
I would agree with that analysis, and also would say that the damages to the oil producing structure in the Persian Gulf area will cause supply to be limited, which will also drive up price of petroleum globally. So thank you, but we'll look at a range and look at and see if we can decide on for planning what the range is going to be, so that we adjust for what we're going to have to pay in fiscal year 27. Okay.
And I will say two pieces to end this question. One is, here in the United States, we don't have a supply problem. We have a price problem because the price is set on a global basis. But luckily, we don't have a supply problem. There are countries that are going back into COVID type lockdowns, working 3 days a week, have no gas, or we're not in that situation. The second part is that this school district and this board have historically made the tough choice. It's easy to take the low number that you talked about. It's the hard number, and you get rewarded by the community, I think, when you take the hard number. So I hope that's helpful. Any other questions?
Online? I do have one comment, if I may add, just sort of on the periphery. Another element in this Middle East conflagration is the fact that so many of those Gulf Coast countries actually benefit from petrodollars. Their transactions are dominated in dollars, and the majority of those dollars flow into the U.S., which has helped us keep our interest rate down when others have gone up. So hopefully, to what Colonel Geyer said, those petroleum facilities can be quickly warp speed rebuilt, so that flow of dollars, as long as China is not successful in forcing countries to migrate from the dollar to the yuan, that could be a threat. So, but
Agreed.
thank you.
I'm just making sure everybody's done ask questions before I make a motion. I move that the Board of Education accept the operational expectation 6.9 through 6.17 debt administration monitoring report.
Second.
Okay, properly motioned and second. All in favor, raise your hand and say aye.
Aye.
Aye. Okay, and those online?
Gordon, aye.
Kay, aye.
Thank you both. Did it do it?
And I was going to say that just if it appeared to people constituents who are looking, who are watching the question around with Mr. Nord, that there was a Q&A on yesterday. So I'm sure that some of the people who may have normally have some of the questions may have met with him on yesterday. So they kind of just fine tune in terms of today leading up until today. So just want to put that out there. So I don't want people to just think that we're just rubber stamping it. There was another additional question Q&A before today. FYI. So I'll put that out there. Thank you.
Mr. Chair, as we transition to the next presentation, would it be appropriate to have a few minute break, 5-minute break?
Absolutely.
Thank
That
you.
okay? All right. if you're there. Ms. Hay and Mr. Gordon. you are
Yes.
ready? Okay, all right, that gives us a quorum. Ready? Madam CFO?
Yes, sir. Good morning, everyone, again. So this morning, we will be providing a budget update for fiscal year 2027. I can't believe it's already here. It feels like we just finished the last budget. So this year we've done things a little differently. But really the theme is always the same. We are building a budget to invest in our students. It is not about crunching the numbers. It's about prioritizing the needs of our students and turning our tax dollars into success for every student in the district. So every dollar that we will be providing as a resource will be focused on student achievement this year, as well as every other year before. So we talk about the strategic plan a lot this year. The previous slide shows the 4 pillars here, and it's also known as C's. Support, engagement, achievement, and stewardship are the 4 pillars of our district's strategic plan. Every decision we make, every dollar we spent must align with these pillars, and it must focus on student achievement. We're going to walk through the pillars today and highlight some of the wonderful accomplishments and highlighting initiatives that we have put into place in the district. When we had a session on discussing what these would be, the lists of items were very extensive. So I've condensed them today. There's a lot more than we have here, but it was a very good exercise in understanding how the things that we're doing are actively directly connecting to these pillars. And so I found it very valuable, and I think our staff did as well. So the first pillar is support, nurturing and a supportive environment. So some of the items that we listed and that we have initiatives we've put in place are enhancing campus safety protocols and practices across all schools. We've expanded access to nutrition for students by providing no-cost breakfast and lunch district-wide through the CEP program. We've strengthened the recruitment, onboarding, and retention by expanding career fairs and improving new teacher training. We've implemented the student cell phone use policy consistently across the schools to support instruction. And we've strengthened internal communication by improving employee internet and intranet and launching a staff newsletter. Just some of the things in the support category. And next, engagement. Unlocking success through teamwork and collaboration. We've deepened community partnerships to expand career pathways for students. We've expanded learning and enrichment beyond the school day to increase student access and participation. We've strengthened family and communication through the Let's Go Public campaign and Parent Square. We've increased outreach and transparency through school choice showcase events and an enhanced parent newsletter. And we've launched BCSD University and BCSD Connected to support community learning, gather feedback, strengthen collaboration, and host attendance-focused community meetings. Achievement. Impactful instruction for all students. We've improved school performance with 90+% of schools earning ratings of excellent, good, or average. We've posted the highest ELA achievement in district history across all grade levels and student groups. We've achieved a record graduation rate of 89.3% for the class of 2025. We've expanded accelerated learning and the OGAP initiative to increase growth in math achievement. We've strengthened student supports and opportunities through MTSS, improved services for multilingual learners, expanded early learning through the CERDEP program, and $17 million plus in grants for magnet and inquiry-based programs we've achieved, and expanded communities and schools. We've outperformed the state with 85.3% of students identified as college and career ready, the highest in district history. And finally, stewardship, careful and responsible management of resources and investments. We've invested in competitive compensation, reaching the second highest this year in the state, and increasing starting salaries over 63% over a 5-year period. We've delivered on capital commitments, completed all 2019 referendum projects. 2023, our referendum projects are 61% completed. Maintained strong fiscal stewardship, reflecting an excellent bond rating, as we just talked about, AA1, AA. Sustained and award-winning financial practices, earning the Certificate of Excellence in Financial Reporting for over 35 years. And we have recently received our 12th Distinguished Budget Presentation Award. We've earned an unmodified opinion for 25 years, which is the highest possible external audit result that we could have in our district. So we're focusing on responsible spending. These commitments, these awards, these achievements are speaking volumes to the commitment of financial stewardship and transparency of the district. And by committing to moving teacher starting salaries to one of the highest in the state and maintaining it, we are directly impacting instruction. By enhancing and modernizing our facilities, we are committing to improving learning environments for students. So those are just a few, several of the things that we're doing actively on a daily basis, but there are many more. So today, what we're going to do is talk about how we're building the budget with those things in mind and continuing to provide resources that provide initiatives like those in order to build a strong budget that focuses on student achievement. So how do we begin to build a budget this size? The current year budget is $377 million for the operations budget. In all funds of the district, including special revenue, debt service, which we talked about today, capital projects, our annual costs are about $750 million. We are the largest operation in the county in terms of governmental entities. We are the largest employer in the county. So we chose this year to begin the budget process by prioritizing the feedback sessions early in the year. And I tell you, that was a game changer in many ways. I think we had more robust conversations, more robust feedback from folks that were directly connected to students, teachers, principals, students themselves. We had senior staff discussions, we had parents, we had school improvement councils, and then we had an online survey through our connected section of the website as well. And so very robust, very productive feedback. So the next slide is budget surveys. This gives an indication of the number of visits, engagements, informed visitors, aware, and those that actually downloaded the presentations that we provided. So we were able to connect with almost 1,000 folks by those that visited online to our surveys. And then we're able to write about what their feedback was, what their priorities were, what their interests were, in order for us to compile those with the other feedback that we had received. So this is what we heard. Basically compiling the feedback into 3 major categories. And this may look similar to last year, and it is, but these continue to be the 3 major categories of priorities. We'll go in on the next slide, you'll see a little more detail to that. But the feedback consistently brings us back to 3 main priorities: academic programs, teachers and support staff compensation, and safety and security. So this is a culmination of all of the feedback. They're basically the top three most common themes of each category, each group of people that we spoke with. And so you can see, I won't go through every one of these, but you're going to see common themes such as specialized staffing for special education and ML groups, the principal said, behavioral support personnel, and additional interventionists. The SICs said increased salaries for everyone, recruitment of teachers, lowered class sizes, again, teacher salaries, student safety, early childhood, teacher staff, mental health and counseling, classroom instruction and technology, covering class sizes, classes, pay increases for staff, and more input on school improvements. So a clear picture is really beginning to form here that we have to invest in teachers and staff in our buildings. They make up more than 80% of the school district's budget, so that becomes one of the main focuses of the budget. So where does our money come from? 99.6% of our revenues come from local and state sources in the operating fund. We do have federal funding in special revenue, which is not in the operating budget that we'll be building, but those special revenue funds are augmenting the supports of the general fund. So we're working directly with Ms. Matson in our special revenue office to make sure that we are able to utilize those special revenue sources and align them directly with what the overall budget priorities are. So it's not just about building this budget. We're building other budgets throughout as well that align with supporting through interventions and other grant programs and that sort of thing. So the district relies heavily, very heavily on local funding. 62%, almost 2/3, is coming from local property taxes right here in Beaufort County. That money is supplemented by funds that the state sends down from Columbia, which is about another 1/3 of our budget. And those state revenues are based on appropriations from the Department of Education as part of the state's budget. As shared earlier, the state is in the early stages of reviewing, debating, and amending the recommendations for the House Bill 5100. The timing of this legislative process creates some budget development challenges for us because the numbers are constantly changing, the projections change. And so every time we get an update, we are adjusting our projections as well. So the appropriations at the various stages of review and approval are provided, but could change as the legislative process continues. So that's why you're not going to see a lot of numbers today. You're going to see about the process, what we're leading up to, what our next steps are. And then the next meeting will have more details for you. But as the state revenues in this source are about $134 million. So we have to wait till we get some more concrete information in order to continue the development of the budget. Final appropriations are usually not received until May, so we're getting early projections, and we really are building the budget and improving it before their final approvals of the state legislature actually occur. So this is a look at our local tax collections. Again, this is 2/3 of the revenue sources of our budget. So this is one of the most critical pieces of information that we use for our budget. What are we receiving in tax revenue? Mr. Nurick talked about not taking assessments and calculating values of the mill for debt service. He is taking a cash basis look at collections to see how we predict how much we're going to receive in the debt service. Well, we replicate that same practice in the general fund, in the operating budget. So we do not take an assessed value to calculate the mill. We look at how much did we collect this month and last month and the month before in order to predict, and we look at economic conditions. We look at CPI and what inflation's doing, and many other factors in order to understand or predict what we also have to predict what's going to happen the rest of this year and then project what's going to happen next year. So we're projecting two things at one time. So the local tax revenues as of about a week ago when I provided this information to you was 221.8 million was the local tax revenues we had received this year so far at 92.7%. As of yesterday, we compiled what we received this week in tax revenues, and we are now at 94.5%. So we received that number, that percentage, and the dollars that relate to that came in, improved our projection by about $1 million. So that is very good because it not only helps us in the current year, it helps us do more with the money that we'll have next year without having to raise the millage. So it is important that we're tracking those on a monthly basis as soon as we get them. Now we're getting them sooner as requested by the Treasurer's Office. We're getting those by the 15th of each month instead of the 23rd or the 24th. So the Treasurer's Office is working with us to ensure that we're getting data more timely. So again, we're a cash basis. We are projecting, we projected the current year at a 6%, our growth factor on the value of a mill, 1 mill is 6% currently based on the numbers that we got today. So that is the growth factor. It has been declining the last 2 years. It was very high 2 years ago and it took a sharp incline and a sharp decline, and it's hovering around the 6% range and slightly declining in the last few years. So we'll be looking at those factors in order to develop the range that we want to be in. I think the growth range will probably be in the 4 to 5% range, but we'll continue to monitor what that will look like for next year based on current year numbers and economic conditions. So the state laws that impact the Beaufort County School District budget. So not only does the state provide bills that impact the district in terms of how we might, what it might cost to implement certain programs or initiatives that are brought by the state, but also they dictate how much we can raise taxes. There are limitations, and how much we can borrow. So there are a very specific set of rules. The state's Act 388 caps millage growth for inflation plus population growth. We are able to, and I'll show in our next presentation, but we have some room to grow in millage if the board would choose to increase the millage rate. And then we have banked some millage as well. So if there is a need, it is there. But that is a limitation of the state government. So although most of our funding doesn't come from them, they still limit the revenues that we can receive on the local side. And then House Bill 5152 is the General Appropriations Bill for 26-27. It dictates it has salary mandates. Those mandates are to the state teacher salary schedule. We are well above the teacher salary schedule. And there are other mandates, as I mentioned, that cost time and money to implement other initiatives that are mentioned in bills. The state can raise teacher salaries, but then they do not often cover the cost of that increase. So we tend to have underfunded or unfunded mandates coming through these legislation. Rarely does full funding come with those bills. And so on the expenditure side, you can see that the state pays for about, that salaries and benefits make up almost 80% of the budget I think it's 76% this year. And so that is the lion's share of the expenditures in this budget. So what's left is contracted services. We have a large portions are maintenance, custodial, grounds, substitute teachers. Those are in this budget. And then we have supplies for schools. So there are allocations based on a per pupil basis to our schools. And the schools then prepare their individual budgets based on their own needs. And other transfers and other utilities is a big cost as well. So that's what makes up the lion's share of the expenditure budget. So some of the highlights of the House Ways and Means budget this year were increasing the state minimum teacher salary from $48,500 to $50,500, so a $2,000 increase for each cell of the salary schedule. That is the state's recommendation. That is not necessarily what we are doing this year, but that is the recommendation at the state level. So that is how they would fund the budget in the state aid classrooms category. So they also are giving 2% across the board pay increases to state employees. So that is the South Carolina state employees would be receiving that. And then school bus drivers, also 2% statewide minimum bus driver salary schedule. Again, this year would be increased. Districts just have to ensure that they pay for at least an increase of that magnitude. So lots of other bills in place. We actively respond back to fiscal impact statements. Ms. Phillips in our office receives bills that we from the State Department of Education, and we have to research the bill, understand it, and then send it out to any others on staff who it may apply to, whether it be technology or facilities related or instruction. And then we get advice from experts in those areas. And then we prepare a fiscal impact to let the legislature know what we believe will impact the district, how it will from a financial standpoint, a staffing standpoint, logistics, and so on. So at least that's only been actually happening the last few years. The last few years we've received those fiscal impact statements, and there are so many of them. I think we counted about 30 of them last year, but I'm grateful to have been asked the question, because otherwise our legislators don't necessarily know what kind of impact that will have on us.
Just to add, as an example, last year there was a funding issue taking place, and some simple changes that were being made were adversely affecting traditional public schools, and so and overwhelmingly favoring charter schools. And it was just simply a matter of they were trying to solve for an issue, but in that effort, we're creating another discrepancy or disparity there for traditional public schools. So different organizations that we are a part of through the state of South Carolina provide information and feedback to us on a regular basis. So what I'm getting at is that there are different sources that are keeping track and keeping tabs on what's happening at the State House. And as they do that, they provide additional feedback. So you get info from multiple sources, and then you have to go through it and see what the actual impact is to schools. So there was an effort made, I know, that adjusted what was happening last year and attempted to provide the hold harmless approach, which still continues. So there are other efforts like simple changes about how they calculate career and technical ed course funding, and whether it's built into the formula, whether it's taken out of the formula. Well, all of those little subtle shifts can have an impact on the revenue that comes from the State Department to the local school districts. And so those are the kinds of things that we're constantly keeping tabs on, which is really important. And this is why the further along you get in the process, the better the picture becomes of the overall budget, because we're able to keep tabs on, we're able to see what the fiscal impact is from a potential decision. Hopefully we can influence that decision in a more positive way with some real information about the actual practical impact of what that decision would really mean to local school districts. So.
So I'm part of a local or a state association, the South Carolina Association of School Business Officials, and I have a number of counterparts across the state, and I think that some of those folks that are more experienced and savvier at the numbers than I may have actually caught on to that issue because their allocations were shifting. And then alerted this Revenue and Fiscal Affairs Office. And so Frank Rainwater at the Fiscal Affairs Office did more research, and then they were able to understand the impact of changes, of the changes that were happening. So it is critical not only for our school district officials to network with their counterparts, but also to their legislative delegations, and having that impact with them, as well as state officials who can do those calculations. You can get things changed if you have those relationships with others. So it really lends to be very important to have that networking and available at resource.
And I would add, time is important too in helping to get things changed, because sometimes things come through at the 11th hour, and when they come through at the 11th hour, there may not be enough reaction time from different groups, on the ground. So, okay.
So that leads us right into the legislative process. So we have moved beyond the governor providing the budget and appropriations bill to the General Assembly. That was in January. Then the House Ways and Means Committee has budget deliberations in February. And then the House of Representatives full House in March. So I haven't looked in the last day or two where we are in the process, but the next step is Senate Finance Committee budget deliberations, generally in April. And then April and May, the full Senate, and then potentially back to a conference committee made up of members of both the House and the Senate. And then could have a second look. The House could have a second look. And then the governor either approves or vetoes or signs into law. And typically that's happening in May or June. And so by then we are already completed our process. And then, so we have to build a budget with anticipation of how well certain bills are doing, how they're moving through the process. Are they getting a lot of support? And then predicting what impacts those may have on the district for the upcoming year. So again, the constraints to the budget would be the millage increase limitation. Also, and I mentioned the General Appropriations Bill 5152. And then, although this doesn't apply to us this year, there is another bill, a section in a bill that is for the calculation of the rollback millage. So it applies during a reassessment year. It doesn't apply this year, but thank goodness, that is a difficult year to calculate things. But there are some limitations that we have on the state side. And then again, the challenges. Our challenges continue to remain pretty much the same. The lack of the inflation, we've talked a lot about that today, predicting what that might be and how we might relate increases in salaries and contracts as a result of in connection with the inflation. And then interest rates are changing. There are talk constantly of if the Fed rate may reduce the rate again. It hasn't happened recently, but that could make have some impacts on the budget. We don't have fiscal authority. That is more of a timing constraint. We have a little longer to go through the budget process. Unfunded and underfunded mandates, unpredictable revenues, and the timeline of the budget process as far as how soon we'll have information. So how do we balance all of the needs and priorities with limited resources? So we have a strategy, and that strategy includes that we will have a balanced budget. So as you see here, we're kind of weighing all of the revenue sources and all of the needs. But we can't spend more money than we have. So we have to start how much are we going to receive? How much do we think we're going to have? And how much, and then prioritize the needs within the budget to fit that. So we prioritize expenditures to maximize academic outcomes. We prepare a balanced budget that is required of board policy. And we maintain a sufficient fund balance to eliminate the need for a tax anticipation note and to keep our credit rating up. It's important to maintain that. We're at 21%. We need to attempt to keep that at a level percentage rate. And ultimately, we want to minimize the financial impact on taxpayers. So finally, the ultimate goal is implementation of the adopted budget on July 1st, 2026. And there's several things, several steps we'll need to take to get there. And so on the next slide is the adoption schedule. And so after today's date, we will have our first major budget presentation to you with the numbers on April 24th. That's a Friday work session that will be the week after spring break. Then that will be sort of the first look at the budget. We will have two more opportunities, one on a regular board meeting at May 5th and May 19th. And so with the final budget certification anticipated for May 19th. And then we will be presenting to the County Council Finance Committee on May 18th. It'll be a preliminary budget. They know that if I'm coming before the board is certified, they know it is a preliminary budget. And then 3 readings following that afterwards. So really, we're focused this year on building a budget that is on things that we value, that are priorities, a reflection of the community's priorities, and to provide plans for the future. So we're in the process of analyzing all of the data. We have compiled the majority of it, and with 3 staff members and a little bit of my time dedicated to assisting, maybe not a little bit is probably not the good word, but and considerable amount of time invested in the process. We've gotten everything back, all of the documents from and budget requests from the departments, from the schools, from estimating contracts, utilities. So every line item, there are over 150,000 line items in this budget. So it does take some time to consolidate, compile, analyze where there may be duplications or opportunities for improving certain budget line items. But we will be in the next few weeks beginning to bring the revenues information and begin to start the work of balancing the budget. And so that's our task for the upcoming weeks. And I'm very grateful for the team. Ms. Katie Abar is the director of budget. This is her first year going through the process as the lead person in the department and doing an amazing job. Her ideas of bringing the feedback sessions to the beginning of the process, and that being the focus of this budget, the listening tour, the information that we received. And that was one of the most important pieces and most important improvements in this budget process that I've seen in many years. And so it also freed up time during this part of year that we could do the analysis and not be in the nightly meetings with forums and other groups. So it had some advantages in a couple of different ways. So with that, I am going to wrap up my conversation today, and with a lot more to come on the 24th. And I'll be happy to take any questions or any comments.
If we may, we'll go online first. Colleagues online, do you have any questions?
No
Mr. Gordon?
questions, but a fabulous job as always, Mrs. Crosby. Thank you.
No questions,
Thank
Ms.
you, Ms.
Pastor Gordon. Keep up the good work.
Okay, anyone else online? I think that's it. Questions here? Hey, oh, sorry, Ms. I can never do that, my friend.
I have a question about the, I'll call it the survey section, where you've got the principals, the SICs. I would like to know some of the results. What was the population size of these surveys? Who was included? Because if I'm looking at it, principal feedback, was that just 35 principals total? Was that the max, or did it include assistant principals? What was the participation rate? SICs, did they vote as an SIC, or individuals that are affiliated with the SIC were allowed? I just don't know how to weight some of the responses. I think the most interesting response was the teachers, because it wasn't even really a budget issue. Number 3, more teachers' input on school improvements. Mm-hmm. To me, that's, if they're putting that in on a budget survey, they really want that to be, that's obviously really important. So I'd like to know the size of these different surveys. I know one of them's like a public forum, so it's not exactly a survey, just to get a sense of how much participation there was. And then the other question I have is on the pie graph, purchase services. When we're talking about maintenance and custodial, is that a purchase service or is that a salary?
It's a service. They're
Okay.
outsourced.
So when we talk about budget increases for everybody, for teachers and staff, does that include ESS, custodial, maintenance, and all our purchase services?
It does not.
Okay.
Those would be, we separate budget for contracted services, and they typically have a cap of a CPI increase each year. Most of our contracts have a cap of 3% CPI. So that would be some range of percentage increase for the total contract on an annual basis. So,
okay, thank you.
As far as the surveys, it is very difficult to get feedback these days, especially in person. So people have busy lives, and I understand that. So we tried a lot of different avenues. The online surveys got the most hits, the most interaction. The in-person ones have less. So the principals, we actually had a series of principal meetings, and with the help of our executive directors, they had we embarked on a feedback, a needs assessment exercise, and we gave them clear expectations of what we expected. And the principals actually took those documents back to their school communities and worked with teams to develop needs. So I don't know exactly who attended these meetings. I would expect it would have been assistant principals included in that, and teachers as well, and perhaps even students. But those were needs, and also they connect to their school improvement plans, which are also developed by all of those groups. So many of their needs and requests were and priorities were directly related to their school improvement plans. Also, the student leadership was Dr. Rodriguez has student advisory meetings throughout the county with every principal, every high school. And we attended every one of those meetings. So there was a group of probably at least 20 to 25 students at every high school. The teacher forum had a group of about 20 of the lead teachers who were representing the teachers of their, and many of them brought ideas and information and comments and questions from the teachers at their schools. So it may not have been every teacher, but it was a representative that was speaking on behalf of a group at their schools. Public forums, very, very sparsely attended. I think we hit one on a playoff game night between Bluffton High and May River High. And so there wasn't much attendance at that one. So there are not just busy lives, but activities at the schools going on that drew folks to other areas. Senior staff. And then the SIC was a joint board meeting and SIC meeting at Okatee Elementary. It was a good turnout, and
Yeah,
we
it's
got
very
some
well
input
attended.
there.
Those, I mean, several years ago, those joint board SIC meetings were very limited in attendance, very limited. But the last, I don't know, I want to say 2 years, maybe 3 years, you have the whole auditorium or cafeteria, I'm sorry, full of people. So many schools represented at those. I'm not going to say all of them because I know there were 1 or 2 that couldn't make it for what have you, but that usually comes with the principal from the school, and it comes with 1 or 2 SIC members, the chair of the SIC, and maybe another member. So maybe 2 to 3 per school when they attend those. I would add to there are different forms and formats and ways in which input on school improvement is afforded. One example is, and maybe something we'll need to do, is be really clear about this is a forum where what we're discussing is school improvement input, right? So as an example, when we do instructional reviews at the schools that receive instructional reviews, okay, that's not a district-driven edict that this is what you are going to do, because I built that process here, and I intentionally built that process here in a manner that is a collaborative process with the school-based leadership. There are staff members that are a part of it as well, that are not administrators at the school, and it's designed to have a review, provide input on a micro level of what's going to be worked on during a series of weeks or months, and then another follow-up review. And so that's one example of opportunities for input on school improvement initiatives and measures that is ongoing. And then there are some other formats. It's not typical. It's not typical necessarily that you would say, today we have a school improvement input forum, right? It's happening along the way in many ways. So we probably need to be clear on I think it would help others feel, that what they're doing along the journey is all input into school improvement. If I would think so.
Yeah, and this is not I think the district does a lot of avenues. When I look at it from a data standpoint, I'm just interested in the themes that come out. Obviously, teacher salary, staff salary, safety and security, you can pull those themes out. But also just if we're doing like the BCSD connected, was it dominant? Was it split? Was it, I just like to see the sort of sense, because someone said, if you want to know what's going on, follow the money, right? So if they're talking money, you want to know it gives you a perspective into what they really care about at the school level, even beyond funding. So it's just interesting to me. I think that the district does a good job. I was just kind of curious about the different sleeves you had here and how representative they were. So I appreciate that answer.
Mm-hmm. Thank you.
Question? Yes, sir.
Thank you, Tanya, for the report. I am concerned, my biggest concern on the budget, and it has been for every year, is 78% of our budget, which is salaries and benefits. we are in a competitive labor market. And the labor market is not a universal market. It has sub-markets. We have teachers' labor market, we have administrators' labor market, finance people's labor market, HR's labor market, operations, nursing, social workers, bus drivers. Each of those employees compete with people in their same skill sets, both locally and regionally. Our biggest single labor market is our teachers. Right now, we are competing not so much with Colleton, Jasper, and Hampton County, or even Georgia schools. They're competing with us because their salaries for teachers and benefits do not match ours. Our competition is Charleston. And Charleston has a lot of advantages, especially for young teachers, that we don't have. And they have a more diverse housing market than we have. So they can live out a little ways and get affordable workforce housing easier than our teachers can. So we have to compete with those markets. So when we come in and talk about salaries, we need to, as a board, to understand what competition that we face in each of those markets. Locally, we probably keep most of the people locally. We don't probably attract too many people from Jasper, Colleton, and Hampton, but there are some, I'm sure. And we probably don't lose many of those job labor market to Charleston either, because of the distances and just people got settled and want to stay here in the community. So I really need to see, when we start talking salaries, if we have done the competitive market analysis for each of the job titles, so to speak, so that we can ensure that we are putting our monies where we need to. Now, this is only for district employees, not for contract employees. That's part of their contract. And so that's something different. But that's my biggest issue with this in this process, salaries and benefits. And that's another thing that we have to make sure that we're looking at, especially in the local market, for nurses, for example. There are nurses that are hired by the Memorial Hospital and the urgent care places that may have, sounds like they have a competitive salary, but their benefits don't match ours. So we have to make sure that we include not just base salary, but also the benefits that we provide. And generally, in these common labor markets, we provide greater benefits than our competition. So we just need to know that so that we can make sure that we are doing the right thing. And bottom line is, it would be nice to have a universal, say 3% raise, but each labor market has a different percentage raise based on their individual market. So that's what kind of analysis I hope we go into as we look at where we're going to have the salaries for our employees for the next year. We have to retain, we have to attract. That's two different pieces. Attracting and retaining are two different pieces. So it will sound good when we go out and recruit for teachers until they get here and they find out how much things cost. So that's a very important distinction in our recruitment effort and retention effort for teachers. Thank you.
Mr. Smith?
And just really to piggyback on a couple of things that he said too. Another thing is in terms of even like our nurses, the time frame that they work is a little different, and so in other positions too, because they do get those summer breaks off. That versus someone who's working at a doctor's care or something like that, they don't get those times off. So that's also something to be factored in. To be factored in there as well, just to add on to thinking to what he was saying, and also I have to bring it back. We intend to talk about teachers a lot of time. We get sometimes I won't say we get caught up, and there's no offense to teachers, but we forget about the bus drivers and the uncertified staff. Because they see the people like bus drivers, they see these kids first. Some of the teachers' assistants, a lot of these teachers, I hate to say it, I'm addressing that in the room. Some people may not like it, but hell, they can't run these classes without these assistants. And that's why y'all just bought us that program where we needed to put certain students in and to get them their different help to put programs in a school. So if we don't have these programs like that to be able to assist these teachers to help teach these students, then that's it's an issue. So we always talk about being in the market of giving teachers and giving raises and being competitive. We just can't be competitive in teachers. Because we have a lot of employees who leave. Some leave this district office and go to another job. Imagine if we could have them help out and do different things here. And in the finance department, we have people who work at the schools who are bookkeepers. Imagine if we could help them or educate them a little bit more and have them stay a little later in terms of helping y'all fine tune some of y'all work. You said a minute ago that you had to put time into it. Imagine if you're pouring into them and you're teaching them some of the elements to make y'all job a little easy, and they're willing to stay because they're getting paid and they feel that as though they're being paid what they're worth. So we can't just look at the teachers. I begin to look at that from a conference that I was just at in terms of they were talking about teacher retention and retaining people. And one thing they said was in terms of understanding, in terms of competing with your neighboring counties, also check in terms of what he was just saying in terms of the living and the cost of living. So when we talk about competing with Charleston, heck, when you look at how much it costs to rent out maybe a 1-bedroom or a 2-bedroom condo or an apartment in Charleston, it may be an average of maybe $2,500. In Beaufort, you can, even though it's high, you can possibly at least get maybe at least a house or a 2-bedroom apartment for less than that. So those are some of the pros and cons that we also have to consider and understand too, that there are places in Beaufort that are cheaper in terms of renting to be able to keep stability for teachers that we must start putting the horse before the cart. And understanding to what he said. That wasn't really some of the stuff that I wanted to bring up, but I didn't want to bring up the teacher versus the uncertified staff members. I think that and I was at a meeting where not long ago where they feel that they are getting lost in the shuffle. And if we're going to say we're going to go public and we're going to make people appreciate that we really appreciate them, teachers need help. And when I look at this, when I look at this packet that was put out, it says pay increase, so support staff and substitute teachers. That's for a reason. I didn't put it on here. Yeah, y'all did. So we can't continue to overlook it and say we have to pay teachers. I'm done with that. That's one thing. The second thing is I understand that we have the student the student meeting and student engagements. One time board members used to be invited to those. I'm not sure where that's at and what that looked like. Those were very interesting meetings, And I almost would like to see some of that. I'm like, Ms. Ingrid Boyd, I want to see some of that data to understand it, to be able to digest it, because hearing different things in the community, different concerns in terms of budget, and people talking about the way our largest amount of money is being spent at across the district versus in terms of educating and hearing all the good things that you said in this packet upon things that we're completing or things that we're getting done. But are we being intentional about growing this district and about having people actively engage in what we're doing? Because having surveys is great. We talked about who do the surveys. That's a very important piece, because we have a part of testing that depends on climate. And if our teachers and staff members don't do the climate, then that affects our surveys. I mean, that affects our test scores. So if they're not doing this survey, 9 times out of 10 they ain't doing another survey either. So, there were some things said today that, just some food for thought. What that looks like is very important. And also, I think that I can't speak about my other colleagues. I think that it's very important that, even if the superintendents continue to have his talk with students, I think the board members, we need to have talk with students too, because we need to provide students a platform where we can hear them, because students are telling me in the community, we're not being heard. And that goes into this information right here. That goes into building a budget, because in terms of, let me give an example, and I get off my box in terms of information. But Mr. Smith, we have certain teams where we used to have be able to have several students, or we used to have a certain amount of coaches. They say, like, when you was in school, we don't have that now. And in terms of, when you look at some of the sports program, and you look at the students that are participating in the program, are they really the students who we possibly need to have engaged in some of these programs? Some of them not. We got great athletes walking the halls. But if we're not paying the coaches, and we're not getting the quality coaches who can get these athletes in these programs, are we really spending the best buck for our dollars? I understand somebody have to work at McDonald's and somebody have to work at Kmart, but at the same time, we need to spend our money, and we need to be paying for the best, so that we get the best results, because results are going to be the driving force of the community and how we move forward. And I'll leave it there. Thank you.
Thank you, Mr. Smith. I think are there any other points of feedback from any other board members? If not, Ms. Crosby, I saw you taking very copious notes from the feedback that you've received, as you always do. And I think this is grist for you to put into the solicitation models that you use, and identifying the subgroups that you are pursuing, and getting feedback, archive and codify that, so that in future presentations that information is readily available. And thanks for all you and your team have done.
All right, thank
All
you.
right. Oh, and Ms. Crosby, I think you should be aware that the 3 ladies sitting in the back were the equivalent of the amen corner in the church I grew up in. All right. Next item. Mr. Joanne.
This presentation comes as a result of a request from a board member who I think had received questions about computer software accessibility, what's on the devices, what kind of access students have. And so that's the basis for this next one. Who's what? No, it was Dr. Carr. All right, it's all 3 of you.
Please proceed, Mr. Joanne.
Good morning, everyone. I was asked to answer a couple of questions on the type of software that is installed to our devices and the age ranges that some of our software is presented out to our students. So first, we'll start with the software installed directly on district devices. Those will relate back to the referenced attachment, all application deployments. And if you pull up that document, you'll basically see applications and then you'll see the collection. So unfortunately, the way it appeared here, it doesn't line up as well, but basically the application is the application we push down to district devices, and the collection is either the school, the group, or the the type of device that that application is pushed to. Now, we push a lot of applications out, but not every one of them goes to each one of our student devices. We would overload that device very much so. So take, for instance, let's just start with Creality Slicer. What is Creality Slicer? It's a piece of software that creates a STL file, which is a stereo lithographic file for a 3D printer. So it takes a 3D object and maps the machine code to a sort of G code that that 3D printer can operate. Well, we have Creality printers, we have flash forward printers, we have Dremel printers. So we have a bunch of printers. So all three of those softwares shouldn't go to every device in the district. So what we do is we put that software on what's called a district software page. So at the beginning of that class, the teacher would go and say, hey, students, please go out to the district software page and download Creality Slicer. So depending on that high school class, if they have access to it, they could see that software because that software is currently being used in CTE labs and different labs in high schools. And it's the same if you go down to different software like Arduino. If you're not familiar with an Arduino, Arduino is a IoT device, Internet of Things. Have you heard of Raspberry Pis? It's very similar to a Raspberry Pi where it's a little software chip that you can add other to. You can stack on a network card. You can stack on a wireless connectivity. You can stack on an amplifier to put out to speakers and pull in sound. So it allows the kids to program different hardware components to better get them ready for the future and what they might do with machine learning. So these applications are broke down into 5 different areas. You have core productivity tools, document creation, collaboration platforms, things like that. Instructional software. Our instructional software is aligned to curriculum and grade level, and we always look to our wonderful people on our instructional side to help us with that because we're more on the technical side and they guide us more on the instructional side. We also have security management tools. If you look through there, you'll see like MFA privilege escalations. That's actually one of our cybersecurity platforms that are in user device, endpoint device manager. And we don't add the name of that type of software for the simple fact that it is part of our cybersecurity platform. And we are working with the state to black out more of the stuff we do. We are a very transparent district. You can go on our website and you can see every piece of software, every piece of hardware we buy. So it's very easy from somebody from the outside, no matter where they're at, to look at what kinds of systems we're using. And it would allow them, us putting that information out would allow them to easier triangulate and attack us better. We also have assessment and testing platforms. So you'll see stuff like the Lockdown browser, NWEA browsers, Respondus lockdown browsers. So each one of those browsers are for a specific test, either a state test or a map assessment test. What it does is it makes that test become a full-size screen where the kids can't pop up a Google window, ask a question. They can't pop up the calculator or any other applications on that device while that test is happening. So it basically creates a secure platform where we can trust the validity of the results we get from that test. Other things we do is accessibility and support tools, screen readers. So for some of our special needs students. We provide different access like screen readers, some different software like Dragon Naturally Speaking, whatever would meet their IEP to help their educational journey. There is a lot of items in there and you can go through all of them, everything from VEX Code, which is used by our high schoolers or middle schoolers. It's another one of our coding platforms. They code robotics and go on to different robotics competitions. Trying to find something that jumps out. And even different access for our teachers and staff members. So we have some different things from Infinite that helps with calculus, geometry, algebra, pre-calculus, and they provide tools for our teachers to help build lesson plans on that. Did anybody have any questions specifically on that first group?
Any questions from those here?
This is a pause. This was only question one. So yeah, first section. I just wanted to give you a chance while it was fresh in your mind if you had specific questions.
Let me query the colleagues online. Ms.
No
Hay?
question. Oh,
Okay, so moving on to question number 2, what applications do students have access to at various grade levels? So that would be reference attachment technology, district supported software. And this includes basically all the platforms we purchased directly and are cloud-based that they would access through our ClassLink portal. So these student access is intentionally differentiated by grade band to ensure age-appropriate content, alignment with instructional goals, and compliance with privacy and safety standards. Our general access framework is elementary K through 5, middle school 6 through 8, and high schools 9 through 12. And you can see the different areas. So for elementary school, it's more foundational learning and teacher curated lesson planning and environment. So our elementary school kids have the least amount of access when it comes to software and the internet. So we don't even allow shopping to be able to be seen by our elementary kids, just for the simple fact that some of the images on those shopping sites can be a little provocative. We then start opening it up more for our middle schoolers. We expand access to collaboration and content creation tools, and also introduction to research and digital citizenship platforms. So middle schoolers are our transitional stage. They are getting ready for high school. They're also digging more into collaborative learning, doing writing. So all of that takes a little bit more access to different databases. And then we get into high school where they have our full productivity suite. So they could use our Adobe Creative Cloud suites and different suites like that. Advanced tools for CTE, design, coding, that deals with all of our lasers, 3D printers, our different tools for robotics and VEX. So we start getting to the high school stage. They're doing a lot more with broader research and collaboration abilities. We also, excuse me. So that would be shown in the district technology supported page. We also have a checkboxes on whether it's added for specific hardware or if it's a cloud-based software. We also have a column that shows targeted user group. So it'll show whether it's for admin staff, whether it's for grades 6 through 8, whether it's for elementary school. All of that's included on the document for your purview. Did y'all have any questions on that?
Thanks. Questions that I was getting was with AI is how easy or difficult would it be for any student to use their platform, whatever grade level they're in, and move in that direction?
As of right now, We only allow 2 AI platforms. For students and teachers, we use Magic School AI, which is curated to the K-12 environment. On our staff side, we also use Copilot because it's approved into our O365 environment. Those are the only district provided ones that we authorize. Now for staff also has the ability to use other AI tools, but students do not.
Okay. Yeah. Part of the reason that, and I think a number of have had similar questions and we've had discussions, but there is a percentage of people who are basically amazed that all of our kids have a device. So it's dealing with, they're just amazed that that's where we are. Then the questions come up with how secure, what do they have access to? Because there's nightmare stories all over the place of kids getting access. Now, some people may think that access may be through one of these devices as opposed to their own phone or their own device. So that's somewhat prompted. Let's learn more about how this all works.
What we found is that most AIs have different image generation tools. Most AIs have different image generation tools and things like that, where a student could put in an image of another student and manipulate it. So we have done everything we can to steer away and control the content and access provided to our children. Now, that's not saying when they leave our building and they pull up their cell phone, they can access all those tools and have access to the internet, but those are on their personal devices provided by their parents.
Yeah. And I was confident that was where we were.
Yes, sir.
But we're still getting those kinds of questions. So.
Any other questions here?
I've got one more section, which is, the last thing is key.
Hold up, Mr. Smith.
I just want to, I just want to say that we also have to be mindful that even though we have firewalls up that may stop the students, that is not the ultimate where all that students actually can't, because we have people who unfortunately make portals and make different programs accessible for students to come through that may seem educational. And once they get in that portal, they can go to any website that they want to go into too. And let me give you an example. By when I was at Pacific, I would say one of the last places that I was at, Right Choices. Some of these measures were in place, but there were certain programs where students understood that they could type in www.so-and-so easystudent or whatever.com, and that portal will come up, and then from there they can click and go into any program that they want to go into and have access to. So I just want to be quite honest, being here, sitting on the board, understanding from being on the ground, being as I say, being a grunt, that those may still those things are still subject to happen, even though we have put the necessary protocols or portal tools that we need to put to stop students. But if your child take the initiative to go and to be able to do that, then those things that we can't stop, then that if you may have happened, I may hear it, it's possible that those students may have used one of those outlets to be able to do that. So I just wanted to clearly put that out there too, because being, like I said, being in the classroom, I have seen that. I do know that is something that could happen, and it's something that does happen. Point blank, period. I mean, I just want to put that out there as well.
Thank you, Mr. Smith. All right, Mr. Chawan.
Okay, and our last section is our key considerations and safeguards. For cybersecurity, all applications go under a vetting for security and data privacy. And we generally try to get a data privacy agreement with every application that we buy as a district. That allows us to put some limitations on what happens when we end our partnership with that company. How do we get our data back? What happens to our data? It's ours. We want it back, and we don't want it to maintain in their infrastructure. The second thing is data governance, that we adhere to FERPA, COPA, SIPA, and all of our current state guidelines, especially for FERPA and SIPA, because a lot of our E-rate funding depends on us following those guidelines. So for our content filtering and our making our best effort to keep all of our data systems secure. And then the last thing is device management, centralized control for updates, patches, and monitoring. We use a couple of systems. On the back side, we use a piece of software called Avanti Patch Management. That software goes out and patches all of our server and critical infrastructure on a nightly, weekly, monthly, depending on as they come out basis. Now, for our staff and student side, we use another piece of software called MCM, Microsoft Configuration Manager, formerly SCCM, and formerly WSUS. Microsoft loves to change the name about every 5 years with one new function added to it. But basically, we use all of these in conjunction with our instructional alignment with tools to approve in partnership with curriculum and instructional teams, and equity of access. We try to ensure that all students have consistent and appropriate digital access. And that's, I think.
Ms. Boatright?
Hey, thank you. Yeah, I'm glad. I didn't realize what this presentation was exactly answering. So that's helpful, because if it's more concern that kids are getting access to apps, I will say, just looking at the list of apps, a couple of concerns that I have is some of those apps are completely depreciated. They're no longer deprecated. They're no longer available. So I want to make sure that we're keeping that up to date. Logger Pro, for example, has been fully retired. So that needs to be off that list. I think that the bigger conversation about that we need to have here on the board is about artificial intelligence. And I will tell you, the CEO of ServiceNow, that's a job placement company. Did you see this news recently?
I didn't.
He said that the current unemployment rate for college graduates is 9%. It's the highest it's ever been relative to the general economy. The Federal Reserve or federal jobs number can't put it at 5.7 back in 2025. So I don't know. I don't have a lot of confidence in ServiceNow's numbers, but he's saying the trends he's seen, he anticipates in the next couple of years a 30% unemployment rate for current college graduates. I do not agree with his assessment. I think that a lot of people that are more techno-optimists like myself think that there will be new roles, that traditional roles that we currently know will go away, but that as our productivity increases, we'll have new roles. So I don't think it's an off-the-cliff doomsday scenario. But what I think is critically important is that if you don't understand these tools, if you don't know how to deploy them, you are going to be severely disadvantaged. And I will tell you at the college level, they are scrambling to figure out how to use these tools. My son uses them all the time for tutoring, for chemistry tutoring, because trying to find a one-on-one tutor and pay for that and line it up and have a session where he can be on, he uses my account. And what he'll do is if he's got a problem that he doesn't understand from, general chemistry, he takes a picture, puts it in the thing and says, what's the answer? Not because he just wants to answer, because that doesn't help you on a test, but okay, that's the, how did you get to that answer? Why wasn't it this answer? Why didn't you include this? And it's like having a professional tutor. And he told me, he said, without AI, there's no way I would have made it in this class. So we, in my opinion, we need to be smart about AI deployment. I think we need to be cautious about who can access it. Obviously, you don't want kids having unfettered access to ChatGPT because there are problematic cases. I think the bigger concern of who's got access to unfettered AI is going to be at the phone level or the home computer, because we don't have control over that. On the other hand, we have to be teaching these kids how to use it, how to recognize it. What are the ethics of it? What are the problems with it? Where is it a benefit, where it's not? So I think it's really incumbent on us from a policy standpoint to start talking about, as many other boards have done, what is our district policy on AI and getting input. I think that there's two reactions to AI. And I'm doing a lot of this because one place where I think AI is the most impactful is healthcare right now. Everybody's integrating as fast as they can go. And so I'm out there working with healthcare providers, looking at things like ambient dictation. And the reaction I get is one of two, like, this is amazing. This is going to add years to my career. Why haven't we had this before? And then the other reaction is, oh, it's going to replace me. It will never do what I do. Will never be as, they're very extreme. And so we need, I think, in the schools to start talking to kids and figuring out how to equip them to what I think is going to be a rather significant economic dislocation. And I don't think it's just for college kids. I think if you're going to go into the trades, I think if you're going to work, own a business, you are going to have to learn how to use these tools, or you're going to be significantly disadvantaged. So I appreciate that parents are concerned, but I think we have to avoid that immediate reaction, just like we're just going to shut it down because it scares us, and start looking at how we can use it. So that's number one. And then the second thing, these are not really questions, I'm sorry. The second thing I think, though, that we do need to hear more about is that cybersecurity memo that came out, which is really putting quite a bit of framework standardized from the State Department of Education on, your role, essentially. It has budgetary impacts from what I understand. And I think also that CIS 18, whatever, 18, forget the word they use for it, modules essentially of cybersecurity.
Yes.
I think that's a great framework that's easy to understand, that you can bring to the board and say, yes, we are compliant with this. In section 2, data management, here's what we're doing. In section 3, software inventory, here's the software inventory. I think it does take a lot of guesswork out of that. So I think going forward, using that CIS framework could be really helpful in our communication with your rather sprawling and elaborate department. So those are not really questions, but topics for future consideration.
And can I piggyback one thing on that? This past, the beginning of this year, we started our first AI course at Bluffton High with one of our teachers, Sean McCann. And it's a program that was developed through the Florida State and USC. So this is our very first AI course in the district. Very first
One of the
semester.
first in the state, because there's only 4 high schools offering it in the state right now.
So we're kind of using that as a pilot to help better understand AI and the ability. Go ahead.
Can I just add a few thoughts? Because I think Ms. Boatwright, I think you're right. I mean, AI is here. I mean, it is, and it's not going away. And it's the cat's out of the bag on AI, right? It's out there, and it is one of those technologies in anybody's lifetime that is going to revolutionize the world in some way or another. It's not going away. I mean, that is a 100% fact. One of the things I personally have been doing and have been moving our within our system to do is to examine this much closer. So I've gone, just came back the last 2 days from a training specifically dealing with leveraging technology on opportunities and issues that school districts face, but opportunities and innovation, and a large portion of it centered around AI. Prior to that, I've got somebody on Mark's team and on the ISD team that we were a part of a cohort or group that is actually looking at AI and at AI's implementation within school systems. One thing I will tell you is these are 2 separate groups that I've been to. These are 2 separate groups that stand to benefit, obviously, from the proliferation of the use of AI in schools. Okay. But one of the things that they all tell you right now is to be cautious in that endeavor, because like healthcare, we deal with a lot of personal data and personalized information. And so what they are looking at is how to create the ecosystem or the environment that allows for what you're talking about, is the preparation of students for the future, and well, not the future, really the present. It's already here, right? So I take that back. The present, in a responsible manner. You mentioned earlier, Dr. Carr, that you talked to a lot of people who are just amazed that we have one-to-one device and access. So the question isn't really about access for schools anymore, because after COVID, most schools we were one-to-one before COVID, but after COVID, most school districts had to find a way to get to one-to-one, one way or another. And so it's not really about the access anymore, right? And it's more about the purposeful use and the intentional use of the technology as part of the instructional program or the academic program, because it's not about adding hours and hours of screen time for kids, right? It's about how do you use it, when do you use it, right? And how is it best to be used? And so that is what I find interesting is the cautiousness with which both of these groups are sharing and presenting their information, which they stand to I mean, I would say at least one of them stands to benefit from a proliferation of it, but the cautiousness of it is still standard, to include the contracts that you write with the companies that you work with, and you let in the door, so to speak, right? Because of the data pieces and what they can do with that data piece. So, we're having to navigate a space right now, which is how quickly can we optimize the appropriate use and effective use of AI with it, or any technology for that matter, but AI is what we're talking about, within a classroom space, to give students the high quality and appropriate level of practice and work with it to learn the skill sets that they're going to need to be successful as soon as they get out of our doors, even within our doors, and do so in a safe and responsible manner that still keeps those protections in place. So where is that sweet spot, right? And that's what we have to find, and all districts are charged with finding. What will it revolutionize? I mean, everything, from the way you move around your house and the questions you ask it to facilitate things within your house, to the work that you do on a daily basis. It's well beyond the capabilities already of writing an email for you or a memo for you. You can do way more with this thing. And to tell you the truth, a lot of it sits and is already available within many of the devices that people have. And it can stay within the device sometimes of that people have, and that's some of the, I don't know, epiphanies for me as I'm going through this, in terms of potential opportunities for us as a system. But I do think, you're right. It is something that we have to find a way to navigate and get through as quickly as possible, because students are going to be doing that, but as safely as possible along the way. Colleges and universities, yes, kids are graduating and they're getting loads of debt, and they're coming home and they can't find jobs to pay off that debt, right? Career and technical education opportunities are going to be certainly an important opportunity, but that's going to have AI too, and so how is it going to go? Because this is that technology that's going to touch every sector of people's lives.
So Nate?
Through a personalized learning approach, Beaufort County School District will prepare graduates to compete and succeed in an ever-changing global society and career marketplace. This subject, I think above all else right now, every decision that we make has to be tested against that statement, because that's our mission statement, right? Including AI, the use of AI, because AI is a global changing thing. When the car was invented, nobody said this is dangerous, let's go back to horse and buggy, right? So I mean, it's here. You stole a lot of my thunder, answered a lot of my questions, which I'm glad. It means we're thinking alike on this, and I appreciate that. I appreciate the fact that we're in a data collection, because right now we're framing the problem, which is the most important thing. When the people ask sergeants a question, how do you take that hill? They're going to tell you about supplies. They're going to tell you all this kind of stuff, and logistics. You ask officers how to do it. They're going to tell you about beans, bandits, and bullets. When you ask generals a question, the generals say, "What's the problem?" and they frame the problem. So I'm glad to hear we're in that how to frame the problem right now. But if we take our time, it's going to outpace us quickly. And I'm thinking right now, it might even have to go into our budget considerations, because when we're ready to deploy, one of the most expensive things out there is use of technology. So like we're going to have to make sure that we're budgeting appropriately for this and how we're doing it. I was a little disappointed that we only have 2 AI programs right now on our list of apps. I didn't even see Canva in there or something like. I mean, it's
Canvas there.
Oh, is it? I didn't see it. I wasn't looking for it. But I did see MuseScore, a studio. I mean, as a musician, I use MuseScore, but I didn't realize that they had a studio option where you could write music for free. But anyways, just saying that I did the pre-read. I'm concerned, because there's always somebody that when a society changing technology comes out like this, there's always going to be people that try to exploit it, for good and for bad. And I'm glad that we're framing the problem right now to figure out how do we do that. But I'm concerned that we might be dragging our heels a little bit. I mean, the people that have been in their jobs now for 20, 30 years, I don't want to use this technology stuff. Well, guess what? When you finally retire, your job description to replace your, that position is going to be, can you use AI? I tell Marines for 24 years, you either change with Marine Corps, changes without you. We either change with technology or it's going to change without us. And our mission statement says that we are neglecting our job if we allow that to happen. I think we need to be on the forward edge of that. So thank you.
Sure.
Okay. I get a lot of comments from my peer group and my social network, if you will. And I admittedly are mostly graybeards and gray matrons. And they are very concerned, especially about screen time. And that our children are spending too much on screen time, and we must put down the computer, put down the phone, and become human beings again. And they're very passionate about it. One of the things that I tell them is, you have mentioned, technology rarely goes backward. It's not going to go away unless you want to become an Amish person. And you have the freedom to do that. But when I talk to people in my peer group, I say, you use this all the time. What do you mean? I said, you done your tax return lately? You've done it electronically? You can sign your tax return electronically now. You don't have to put your signature on it. Yeah, well, we should be teaching cursive. And I said, why? Do we still need to teach how to saddle a horse? I mean, these are things that we have to, and part as board members, we get these kinds of criticism. I get stopped in the grocery store and say, the children can't multiply, don't know their multiplication tables. And I hold up a phone and say, oh, I got it right here. So that's one of the biggest problems. But I do see their point. And one of the points I want to make is that the school system and education has got to find the balance. And the balance is the human to human, face to face, eyeball to eyeball interface. And one of the things I noticed when my grandson was taking an AP course at Beaufort High, he had to give an oral presentation. Perfect. Couldn't rely on it. But yet I went to a history conference as a judge, and what did I see? I saw a history kind of mini series on video where they, instead of giving me the presentation personally, they just turned this laptop around, pressed the play button where they recorded their presentation. Well, obviously, when they recorded the presentation, they edited it. And you only see the face, you don't see the body language and all those kinds of things. So finding that balance between the screen and the personal relationships and ability to deal with humans rather than deal with a machine is one of your challenges that education is going to have to face. And as board members, we have to be able to speak to all our peers and so on to explain to them, this is what's going on. And then, oh, by the way, when I get somebody that's really adamant about it, I said, let me take you to a school. And I take them to a school and I have them watch kids work with the smart boards, work with their laptops in the classroom. I tell them, oh, by the way, do you know that the state tests that you mandate, that the state mandates are taken on these? Oh, they didn't know that. They didn't realize that. So that's part of the education process that board members have to do, is to talk to the community and respond to the emails that we get saying that we should be watching out for technology and we should be handling it some way that they think is appropriate. So that's a challenge we got.
Yeah, I would just say I would challenge the notion a little bit that we're dragging our feet on it, in the sense that number one, all of this definitely involves a change management process, right? And in fact, it's one of the things we talked about yesterday. In a change management process, you know, if you're trying to get from this island to the next island, right? The decision's been made that we're moving from this island to the next island. And so we're on the journey. The question is, you've got, let's say, 3 people. You've got your swimmers that take off running or swimming, I should say, and trying to cross that island, and sitting out there in the middle are sharks. You've got your spotter, right? Who's a more of a shark spotter, and looks and analyzes and navigates the path, but before he necessarily jumps in that water. And you got what they call the flagpole holder, who's going back and saying, no, this is the way we've always done it. We shouldn't change it all. We should keep it this way, right? And so in that change management process between the swimmer and the flagpole holder, right, is the opportunity to find the path forward, to identify those within the organization that are willing to move and move the needle. But then again, to do so responsibly. And part of that is, I would say, we're one of the first, definitely in the state of South Carolina, offering a course in AI. Those kids have put together presentations and presented to one of our medical organizations in the area around finding solutions for problems utilizing AI. And so there's a performance-based assessment involving the use of AI and collaboration amongst students in order to get there, which is real world experience in any business and any corporation, right? So I would challenge a little bit that we're moving too slowly, but we are moving. We know we need to move. And the question is to find the right path so we don't find ourselves in a scenario where one of those sharks gets you and all of a sudden you're in a $90 million ransom for personal data that exists, right? And so it's a tough spot, you know, trying to sort that out, and we've got to do it. That's you know, the bottom line. We've got to navigate. We got to find the spot and find that sweet spot on that journey.
First off, I would like to go back to the last comment that I made prior to the chairman telling you that you could proceed. I think that you wanted to comment after I commented. I said, point blank period that those things do happen. And you seem like you were from the comment. I wanted to know what you were going to say even before I even bring my comments about this section. Because one of the things that as a district moving forward that in life you have the good, the bad, and ugly. And whether people like it or not, it's in every company, it's in every district, it's in everything that the world has. And so I said that to say that I believe that you were going to respond to that. And if you were, then I would like to hear what your response is, because it does happen, and no one's perfect.
Mr. Smith, we don't need to do that if it's okay. I thought you had a question.
No, I do have a question, but
What's your question?
I think that I think you are out of
I'm
order
not out of
because
order. Just what's your question?
because
Just
no
pose your
no no no
question.
hold on.
Pose your question.
You can't, because you came across, and I wasn't going to say it to me. I wanted to call a point of order because you came across. Hold on, I'm talking. You came across kind of dismissive. You said, Mr. You said to Mr. Mark, you said, okay, next thing. But he was going to respond to that, and understanding where we're at in this in the climate that we're in, that we at some point in time, certain things we must address publicly, because if they've brought that question to him and they've brought that question to me, and I have heard that and I have seen it, and so I've said it and I'm said to protect them. Just like, no, I'm not going to say that, sit up here and say knowingly, and some people know that I've seen that, knowingly, that and admit that, oh, it doesn't happen. No, it happens, and it just doesn't happen here in this district. It happens across the country, everywhere, because you have people that make those types of tools, just like vapes. People who make pens that look like that are vapes that look like pen, and students may have those pens. They're vaping, and people don't know. So those things do happen. And so he was finna say something, and I wanted to hear what he had to say. And I think I had the right as a board member to hear that. And not only maybe I want to hear that, but other people in the community want to hear what he had to say respectfully. That's what I want to hear. And I also did have some questions to bring to this part of the segment, but I want to start there because I wasn't done.
Okay, so now that you've finished, may I share mine as chair?
Sure, absolutely.
He responded before you. And so if you've noticed, with great discipline, I have followed who raises their hand first. That's all I did. Now, you are projecting and saying you can read his mind, but all I'm saying is he raised his hand first. God and everybody who knows me, I'm going to be very disciplined about being very fair. And then I said I will come to you, which I did. So if you have a question, go forward with it.
No, I'm not talking about this in this junction. I'm talking about before he started this segment. When I made the last comment, that's what I'm referring to. I'm not referring to about when you called on him just now. I'm talking about prior to that, before he went on to talk about this list. Okay. I'll just move on for now. Yeah. I'll just move on. But first off, let me start by saying I appreciate your presentation, but also on this sheet you have a date and time, right? I mean, you have a date on this one. On this one right here, you don't have a date and time. And I ask that when you bring these forward, so just that if we have this information, could you put a date and number the pages so that we can number, because Mrs. Ingrid Boatwright referred to some things that were still on here that shouldn't be on this list. And I almost asked the question, well, where did you see that at? What page? But it's not numbered. And I always ask people when they bring presentations forward to please put numbers of the pages, so that when you refer, it'd be easy if you say, hey, on page 6, this is where you can find so and so that, and so at. As he brought out something, you said that it was there, and you could say, yeah, it was on page 7. Just FYI. And also to go to something that one of the things that I was going to bring up in terms of technology is we at the conference we had a long talk about AI, but also we had a long talk around screen time and what that looked like to people. In terms of understanding what screen time looked like in cursive and different things like that. One of the guys said, what happened if the power goes out and you don't have powers for days? Then how will you teach kids if you can't get electronics up and running? And I remember a while back at some of our schools, we did send packets home. So when we send out those packets home for those students to do, just in case, like he said, what if power goes out? I think it was one of the last storms. Then if you can't use technology, then you revert back to your other option. And your other option is paper and pen. And so and why am I saying that? Students who cannot write in cursive and also tell time. Those are things that because of technology, we've spoiled our new generation, and they have a right to learn those and to have those skill sets. And we can't and we should not short them those skill sets. So those are things that I will be bringing to the table because of the fact that I respect the screen time, I respect understanding the AI, but also we do need to look at how much times our students are using screen time, because there are also lawsuits out there that are saying that there are apps and stuff that are basically kind of sucking kids into using screen time, into being on these apps a lot. So therefore it's taken away from the kid going outside and playing basketball. It's taken from the kid going outside and having that conversation and actually having an engaged conversation with each other over lunch. So those are things that we also have to be cognizant of moving forward in terms of technology and what Mr. Nate just read. Because this morning they were saying that teenagers now are beginning to, there's an app that where they gamble. So they're saying that now that they have apps where our teenagers are beginning to gamble because right now we have the CIAA and we have these basic tournaments going on. And so once again, these are things that we have to make sure too that we're not promoting or that we are trying to give them other options not to do those things, and that we are engaging them in different ways of how to spend some of their time as well. In terms of we're still printing books, we still do have libraries. So that's just some food for thought. In terms of, I won't go back and say some of the stuff that the superintendent and Mrs. Boatwright did say, but we did talk a lot in terms of understanding AI. There were a couple of workshops that were interesting in terms of breaking down what that looks like and not running from it and not just digging into it or peeling the scab in terms of, but understanding it and processing what AI can do to your district. And they even talked about one program to where it had a where they wanted to pilot. I'll tell you about that later, but they wanted to put to pilot how you evaluate teachers doing an AI program, which is basically a basic information where they understand exactly, hey, this is what we're looking for, point A, point B, point C. So AI is very much so involved in where we're moving as a country and where we're going, but we still need to some kids, we still need to make sure that our 0 through 5 or our 0 through 10 elementary 0 to 5 still maintain the basic skills, because if they don't have the basic skills, how will we prepare them to compete globally and international if they don't have the basic skills of being able to tell time and reading cursive, different things of that nature, if they don't have technology. So those things that we don't want to rob them of, we need to make sure that we're not doing that in terms of screen time. And I think also, wrapping up, I think that there have been a lot of discussion today that leads me to believe and to understand that the technology committee is very much so needed, because there's a lot has been talked about today, that technology committee, with my experience from being on that, that it needs to be brought back, because there's a lot of discussion that not discussing it right now, but needs to be in depth, and needs to be processed and understanding in terms of this list that was just bought, and other things that need to be understanding further. And I know that they don't want to use this work session place to do it, but it needs to be done. So I think that the committee needs to be revamped as soon as possible as well. Thank you.
Mr. Smith. Okay, so Mr. Chowan, I think you've heard a lot of feedback from different groups, different perspectives, pro, con, middle of the road. I like to share some points from my personal perspective. Now, the first thing is, God and everybody knows I'm not a techie. Kids are superb at it, not me. However, 3 weeks ago, I was presented with a business opportunity by colleagues who used to work for me in Africa, in the Middle East. And they approached me and said they wanted to lift 50,000 metric tons of fertilizer, and where could I help them get it? And we decided it was from the country of Egypt, which used to be in the region I ran. 50,000 metric tons pays $3 an hour to whoever brokers that. So just figure out the economics. Now, where am I going with this? I was scrambling, where am I going to get all these documents from? And Carlton, who is not a techie, without guidance from his kids, went on to ChatGPT and said, I want to lift 50,000 metric tons for 12 months per 50,000 metric tons per month for 12 months. Where do I get the documents? Who are the legitimate best suppliers? Who has the best integrity? Who has the fewest legal issues about failure to provide and supply? Now, I had some people who work with me, one of whom is now Minister of Petroleum and Resources for General Assisi, who took over Egypt, but I can't get to him. There's a wall. But ChatGPT enabled me to actually find out his email address and send it to him. So I'm just giving an example. When you hear people talking about, we cannot stop this, the Luddites in England back in the 1800s did not win against farming mechanization. They lost. So we're going to lose if we're against AI, but we have to move it forward. So those are the first two things. The third thing is being first is a competitive advantage. So I'm really in support of looking at how do we take it and leapfrog forward judiciously and with protection. Now, I also know and just learned recently within the last 2 weeks, there are tremendous assets devoted to protecting American society at the federal and the state level, that they are running all kinds of efforts to make sure that people who are trying to get in and hurt us don't. So that's the third thing. There are significant concerns and assets devoted to protecting society. I just mentioned that. The other thing I will suggest is you've heard with passion about AI and us getting to the forefront of it. I will suggest you take that as solid, reasonable guidance within the constraints of the budgetary that you're developing, but you're early in the stages of development, so there's still opportunity, I would think. And then see how far can we go without sacrificing safety and security and compliance with all the federal and state regulations that we're due. So that would be my suggestion, if that's okay. Any other comments? Sure.
I know this is a big topic and we're going to have, but I wanted to say one thing because this comes up all the time. I work with mostly retired physicians where I work and retired nurses, and they are AI resistant more than most. But to be honest with you, most time when you actually get them to try it, they're blown away. I think one thing that's really important when we have these technology discussions, AI is not screens. AI is robotics, it's self-driving. In fact, in a lot of ways, AI could make us much less screen dependent. So I am completely in agreement with reducing screen time. I think that getting kids, there's a study now at Harvard that says that even Harvard students can't read a book start to finish because they don't have the attention span. They're used to shorts on YouTube, they're used to Snapchat. So I do think that we can have both. We can talk about smarter screen use and, bringing back more tactile learning, et cetera. I was listening to this great MIT open course on public speaking, actually. And he said, before the class started, he said, and this is MIT, right? So they all got like the laptops. He said, put your phones down, close your laptops. And he took him a minute. He's like, I am serious. And he said, the reason is your brain only has one language processor at a time. Like Mr. Smith right now is on his phone, so he can't hear what I'm saying. And I'm on my phone during meetings too. I mean, that's just part of it. But if you're trying to get a message across, you can't have all the screens in front of you all the time. So I think you can have a talk about screen usage, but that should be separate from artificial intelligence, because that's even though it involves computer chips and sometimes involves screens. And if you're using ChatGPT, you're on a screen. But when I drive my self-driving car, so I'm sitting there, I'm not driving, I have a voice version of AI and I can talk to it. I'm not looking at the screen. I don't have to look at a map feature because I put the destination in. I don't worry about it. The car's taking me there. AI can actually reduce our use on screen. So I just want to, because that is one of the biggest obstacles. This is not about, AI is not about being on the screen. We have been at peak screen time over the last 10 years. I'm hoping AI brings us down off that mountaintop.
Yes.
A point of order. I mean, I'm actually, you're right. I was on my phone just because I'm trying to figure out somebody over here phone just keep pinging. So I'm checking all my devices to figure out who have their phone on ring. I just hear ping, ping, ping somewhere over here. I don't know who it is, but that's why I'm checking. I'm checking my phone because I keep hearing this pinging. I know my devices are on vibrate. So whoever that is, if you don't mind, could you put your phone up probably on vibrate because it just keep pinging, 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 pinging. It's getting a little irritable. Thank you.
Okay. Anything else for here?
I think one last comment on the topic, and because I want to be super clear on this is, and sometimes this happens when we get into different conversations, but I hope you understand that your school district is not averse to AI and is not resistant to AI or the technology that lies before us. In fact, it's very much in use throughout your school district here in Beaufort County. So I want to be clear that it is in use. The question is, how do you move it to the whole instructional process and opportunity for students? And one of the challenges that school districts across the country are going to face or are facing, and we're no exception to that, okay, is we're asking to move, and I say we, I mean all of us, including our district staff, we're asking to move into the horizon. But you're regularly drawn back to accountability systems and state assessment systems that are not designed for tomorrow. They're designed for long before yesterday, right? And as you drive in that direction, you pull away from that. And as you pull away from that, that has an impact. So I do think that from the federal level to the state level, that aspect of the educational systems needs to be reimagined, needs to be rethought, because as long as you're beholden to that level of innovation is hard to get to in a fast pace, I should say.
May I? Sure. Okay. So theoretically, what I've seen work very well in execution is you don't desert what's behind you and what you're proving it. What you do is you take a satellite or a pilot in a much smaller group and you experiment with them. And that's what I'm proposing, because to actually go full bore means you risk the whole organization. No leader is going to do something as foolish as that. But you do want to be able to say, hey, we're taking a look at it. And what I heard was you already are doing that as a district.
That's the change management process that incorporates the swimmers.
That's right.
The shark spotters and the flagpole holders.
So does that help? Okay, thank you. All right.
And in terms of that, I still do think that, as I said before, I think that I do hear what you're saying respectfully and loud and clear on that. But I think too that we do need to have a conversation in terms of what that looks like, who, what, where, when, why, and how. Because we can say this not this work session, but everybody across the country or across in Beaufort County is not really totally engaged and may not understand or may not even have the total fully understanding to what you two just said, because what you two just said, I may kind of take some of that in, but the pace of the conversation, then there was so much going on. So therefore, I think that once again, that's why I think that the technology committee needs to be brought back, because of the understanding this. That I think that this is a not a one size fit all. I think that there are different pieces to this puzzle that's going to make the whole puzzle come together. And I've heard, in terms of looking at not having some technology as in pullback, I've heard that from Geyer, Boatwright, me, of screen time kind of being not. Then I've heard some stuff about AI. And so I think that what that looked like within a kaleidoscope of view, it needs to be analyzed, and what that like, and how do we set it to the community when these things are brought up to us. So once again, I think that, yeah, I've heard it, but it needs to be analyzed and understand in a different venue, in a little more, not just say, okay, that's what we got. Take it, go out and make it work, team. Now it needs to be understanding who, where, when, why, and how, and who's doing the work. Because we said that we have one school doing it. What does that look like? A presentation can be brought to the committee. That presentation can then be brought to the board as well, and say, hey, this is what this class is doing, and this is the fruits of our labor. So once again, I'll leave it there.
Thank you, Mr. Smith. And we'll conclude this conversation. And Colonel Guyver, going to you on the ACE.
Can we get lunch?
Is everybody hungry? Okay.
That's enough. It's enough.
Lunch it is. But let me say this before we go. I think what you just heard is, and the reason that I'm a proponent of you and your staff taking this on, doing your normal methodical business review, looking at all the options, and then coming back, answering all the questions that you've heard here today. You just heard 4 different board members have different perspectives on it. It's hard for a board to meld that. It's hard for a subcommittee to meld all that together in a very timely manner. So what I'd like to do is continue to say, the administration take it forward. You heard all the comments, come back and answer those comments, all right? Thank you, and now we are ready for lunch.
Thank you.
Let's come back at 1 p.m. sharp. Is that okay? Okay, we hope everyone had a wonderful lunch. We have a quorum, and so Colonel Geyer.
Thank you, Mr. Chairman. The school board appointed members to the ACE board by the chair, and the board members are myself, Mr. Smith, and Mr. Small. I was not able to attend the last ACE board meeting, so I met with Dr. Michael Lavecchio, the ACE superintendent or ACE director, on March 19th, and to prepare myself and to brief the board about what's going on at ACE before our next meeting, which is on April 2nd. Dr. Lavecchio has been very, very busy making different visits with the schools in Jasper County and Beaufort County about his programs. because of that, he's right at 96 to 99% fill of all his classes right now. His high attendance is also helped by he has very, very low discipline issues at that school. Now, he's getting a lot of support, and he gives great kudos to the maintenance group. Said that you've done an excellent job in supporting the school. The board may not know or may know that the state superintendent has visited that school twice within the last 3 months. First time for a general orientation, the second time to get her hair done. So this gets a lot of visibility for a program that was voted last year as the best of its type in the state. We've also had, he reports great results of his students going to different state contests for showing tasks for individual courses that are taught there, technical hands-on tasks. He's got a 97% student placement rate in Perkins indicators, which is one of the major ways of evaluating aptitude and academic success. We do have a problem, and one of the problems we're going to be discussing next week is funding. Our original MOA with Jasper County School District has us paying, I believe, 75% of the cost, and Jasper County paying 25% of the cost. Pardon me?
2/3, 1/3.
2/3, 1/3, yeah, 66, 2/3, 1/3. Well, they are not meeting that number of students. And so that's causing a problem with the Jasper board saying, why are we paying so much for so little? And it's not because they don't have room for them or they don't accept them, it's they just don't supply the students. As you know, Jasper County and Jasper County School District has had some financial problems and has been taken over by the state. The board has been removed and a new board has been appointed. And I'll be meeting with that board next week for the first time. And we're going to be discussing the costs, because there are significant costs that need to be taken at that school. They've spent $2 million, I've been told thus far, just on doing the design work of what they need. But there's electrical issues. Electrical issues are really significant. And there are plumbing issues and other safety issues that have to be taken care of. So we're going to have to figure out how to pay for these and to get them taken care of. And that's now, Dr. Vecchio has met with the superintendents of both districts, and they are aware of the issues and are working the issues. And the meeting next week, I'll be able to find out what's going on and where we're headed. And I'll be back and report to the board at our next board meeting. And that concludes my report.
Thank you, Colonel Guyer, for that update. Buford Jasper Ace is a valuable asset to the area. And so I'm sure collectively between the two superintendents and yourself that we'll reach some positive conclusions. Moving now into the chair's report. Yeah, sure.
Thank you, Mr. Chair. So are you meeting with the entire new school board? The Jasper County School Board?
No, it's their appointees to the ACE board.
Oh, okay. So yeah, ACE board to our.
Yes.
Okay, ACE board to ACE board.
Yes.
Gotcha. Okay.
Yeah.
I was like, if it was a singular person meeting with their
Yeah.
I would, I would just, I would just add that, because of, the board in Jasper having been disbanded, the state superintendent had to appoint 3 individuals to serve on the Jasper board, so that the work of Jasper of Beaufort Jasper Ace could continue. Otherwise, it's on holding pattern. So
I also have a question. This has come up before. Jasper County, in fact, annually, Jasper County has complained about their contribution. And to keep in mind and to educate people who might not already know in the public, they built their own CTE center several years ago, and that probably has something to do with it. We are also building our own CTEs and expanding those. So I'm fine with the boards and the superintendents, but that's going to come back to the full board for a more robust discussion, because I think that there's a lot of strategic planning that needs to go into this. So if you guys are going to hammer out like what's possible and bring that back to the board so the board can discuss it, I'm fine with that.
I was wondering, well, first I want to say, I noticed that, Guy was, bringing the update. Did we have our first meeting over on the ACE board? Because I was not aware and I wasn't saying anything. And the first update I have from the ACE is that we're having a meeting on Thursday. So I have not received anything beyond that, to my knowledge, from ACE. So I'm not understanding what would be an update from the ACE board at this time.
So let me answer that. So the ACE board actually met 5 of the 6 members doing the changeover from myself to the next person, and that was Colonel Geyer. And so everyone had got notification that there was a board meeting. And so that was, I don't know what happened that you didn't get yours.
Well, I know one thing, that there is 2 William Smiths in this district. And I'm William Smith 2. Maybe they sent it to William Smith 2, but I know for sure that I did not get anything in terms of an ACE board meeting, in terms of us having an ACE board meeting. And also, prior to me being on the ACE board, the last time I was on the ACE board, when we had a meeting, the person from ACE did call and say, "Hey, look here, this would be the date," and we were trying to work around to figure out what would be formulate the new ACE board, what would be the dates that y'all would want to have to start out. That did not happen, and so I'm a little lost when it says update, and it says Guy giving an update. I'm under the assumption that this will be our first meeting. So when there's an actual update, I'm wondering where did the update come from when I have not been notified, and definitely not correctly. If there was a meeting, no one has picked up the phone call and said, hey, there's an update, or I've not been sent a calendar invite up until this point in time, in which the calendar invite is for Thursday the 2nd. So beyond that, I am a little lost, a little concerned moving forward with the ACE board in terms of being notified to what traction that we have going on.
Well, all the ACE members, allegedly, myself, were notified of the board meeting. 5 showed up, and so you did not show up. Now, what you're saying is you didn't get notification, so that's something to actually explore. But the superintendent for Jasper County was there. I was there because Dr. Rodriguez was traveling. But I only served to transfer it over to the next board chair. So everything went forward. There was representation there. There were accounting presentation. It was a full board meeting, officially notified. So maybe we should check, and you can check with Dr. LaVecchio as well, to make sure that they have your proper address, because you are a member of the ACE board.
And by the way, I haven't missed a board meeting besides the special call board meeting with evaluation tool. I haven't missed the board meeting since I've been on the board. Okay. Yeah. So I do have a perfect attendance. So me missing that meeting is very unlikely in terms of missing a meeting. So I just want to put that out there. So me not coming that's not that's not that's definitely not normal for me. And I've never missed the ACE board meeting, by the way,
And,
when I was on the ACE board meeting the first time.
and I was very surprised because I know how much passion you have for ACE. But again, my role was to transfer it over to the next person. The board, the 5 members voted, that's all codified. So properly administered. So you are on the board. So I would suggest you stop by and make sure you have they have your right notification. Absolutely.
It's horrible.
Anything, okay, so going with the chair's report. The board held a joint Board of Education and SIC meeting where 13 agenda items were covered. And as you may know, between the joint SIC and BOE meeting, there's a list of agenda items. And those items have tended to grow. And at the meeting where it was discussed among this board of trying to make sure we get those things rotated off, proud to say that at the joint BOE and SIC meeting that we were able to take off 7 of the 13, and so only 6 were left. And so, of course, we think that's progress. Meeting lasted as scheduled, an hour and a half. And so we adjudicated those things that came up. And so was very proud of that. The participation was good. We had firm questions coming from attendees, teachers, staff, citizens, and answers were given to those things that were raised. The second item the chair would like to share is that we attended a South Carolina School Board Association leadership team meeting. And at that meeting, there was a presentation on cybersecurity. It was an eye-opener. And we had people there from entities at the federal and state level who have extensive background in basically preventing cybersecurity breaches. And they showed us what they could in terms of protecting school districts. But one of the things that they really mentioned that was a shock to me is that public schools are one of the most attractive targets for cybersecurity intrusion. And that is because we have so much information on kids and their parents and what have you. So it was very, very much an eye opener to me. And that 2 weeks later, I was able to attend the South Coast Cyber Centers, which is located here in Beaufort, their summit. And we had a 4-star general who was over one of the major branches. I think it was Southcom. And he was also, over cybersecurity doing one of his last assignments. And we had people who had extensive backgrounds and could share what they could share, they did, about how there are entities outside of our country and outside of our state who are really trying to penetrate our institutions and without a real good intention. So that was something that, as we went through that conversation earlier today, I think is very appropriate that we're taking a look at it. The next thing I'd like to note is that one of the areas of real interest is the growth that's taking place in Beaufort County. Beaufort County has the county council has 2 groups and meetings that affect the north of the Broad, and then a separate group that affects and looks at planning for south of the Broad. The one south of the Broad is a combination of Jasper County, municipalities in Jasper, municipalities in Beaufort, and Beaufort County. That one is known as Soloco, and they meet the 4th Tuesday of every month. It's very informative. They're normally, Colonel Geyer's been there when he was chair, and it's very informative and it's very inclusive. And we can learn so much about where growth is going, what types of investments are occurring. And one of the major things is learning that Jasper County basically is 53,000 units that are already planned and approved. Just a matter of them being built. So when you get to that border between us and Jasper, there's a lot of tremendous growth going on. Similarly, there's also a similar group called Northern Region Plan Implementation Committee, which meets here in Beaufort. Meets today. That's exactly right. And Colonel Guy has been a real stout member of that and has participated, as have our people from operations and finance. So it's good to know that our people are getting out there. Long-range planning really makes a difference. And when you see some of the longitudinal studies that they've done in the forecast going forward, there is a lot to be said for where growth is going to occur. And hearkening back to our AI discussion, there's a lot of upside, and we just need to manage that. The last thing I'd like to share is presented to a community group at a church. And there's so many things that the district does that, I mean, there's so many things that are just phenomenal. But the one that I chose to speak on is parents as teachers. And that program received so many positive questions and accolades and inquiries about how do we get involved? How do we participate? We told them about the new Parents as Teachers bus that was unveiled at Port Royal Elementary School. And it was very, very much a energy level increase. So just wanted to share that as board members go out and attend these type meetings, I've learned that maybe one contribution I can make is I go out to actually come back and share things, archive them, codify them, so that it's not just me as an attendee, it's also sharing with a larger audience. So with that, I would like to conclude the chair's report.
Mr. Chair, I move that we move into executive session for the following reasons. Receipt of legal advice relating to the pending claims covered by the attorney-client privilege pursuant to South Carolina Code annotated section 30 TAC 4 TAC 70A2. Discussion of negotiations incident to proposed amendment number 7 with MB Khan Construction Company Incorporated for HME Kraken Middle School partial HVAC replacement GMP proposal pursuant to South Carolina Code annotated section 30 TAC 4 TAC 70A2. And discussion of negotiations incident to rebuild of Hilton Head Island High School Phase 1 furniture purchase 2023 referendum pursuant to South Carolina Code annotated section 30 TAC 4 TAC 70A2.
All right, properly motion and second. Is there properly motion? Is there a second? Second. Properly motion and second. All in favor?
I have a question before we do that.
Okay.
Who will be advising us on these legal matters?
Ms. Cartledge and staff.
Thank you.
Any more questions?
No, that's it.
Thank you. All right, all in favor, raise your hands. Aye. Aye. All opposed? Nays? All right.
Hey, I.
Pastor Gordon, aye.
Okay, motion passes. Thank you. Back in open session. please. Sorry.
Mr. Chair, there are two motions coming out of executive session. Number one, I move the Board of Education approve amendment number 7 with MB Construction Company Incorporated for the H.E. McCracken partial HVAC replacement scope of work with a guaranteed maximum price of $922,455 using fiscal year 2027 8% funds.
Okay, properly motion. There a second?
I'll second for questions.
Okay.
My questions. My question is, being that this is an 8% funding and we're voting on it today, how did we get here to this now in terms of who, where, what, when, why, how?
Yes, sir, Mr. Smith. So this is FY 2027 funding, which means it would have been approved last year going through the operations committee and the board as an 8% project. So does that answer your question?
It was approved last year, but are we just not getting to it? And I mean, like, what's the, help me, I'm understanding the timeline from it. I mean, I understand it was approved last year, but why would we're in at the end of this year, going into July again of next year, and we're just not talking about it.
Great question, and something actually I hope to bring up in the operations committee this year, because actually time is taking more and more time. But basically, so in April of every year, we bring to you the 8% list. And like this year, we will bring you the FY 28 list, which means summer of 27. Last year, we brought you the FY 27, which means summer of 26. So those that you approved last April, well, the board would have approved in June. It went through the operations committee in April and May. They were approved back then for work to be done this summer. That's how 8% works. It takes us right now, air conditioning equipment, probably takes us 3 months to design, 2 to 3 months. Ordering for some units can take 8 months to even a year. So one of the problems, since you brought this up, if I can take advantage of this, is so we have about 15 months from approval to get the work done, but we're seeing that we need to order equipment sooner. So one of the things is we need to start design work actually before the money gets approved for the expense. Just something that we're kind of talking about internally. How can we start even earlier? Like we need to be starting actually about now for air conditioning projects next summer, or we aren't going to make it. And we've had that problem. If you remember last year, there was a lot of issues with the whole changeover in refrigerant, and that caused delay in a lot of the equipment, and it didn't show up in time by summer. So one of the things, to your point, Mr. Smith, is we're going to need to start earlier in design, because sometimes a year to 15 months isn't enough time to design, order, and have it ready for summer. That answer your question?
Yes, sir. And then also in terms of this being I believe which phase, this is the phase before the last phase. So you're bringing more air conditioning units from the same school. Is that correct?
Yes, sir. There is one wing that still remains to be completed, which is the 600 wing is left. This is for the 700 wing.
And the issue I have with this is that I've asked in the past that we bring them all at one time, because at the beginning of the year, we've had several buildings who've had issues in terms of AC units and et cetera, things of that nature. And so I think that we need to fix this as much as possible in terms as one time versus patching it up at fixing it in wings in certain schools, because you having students that are saying that certain parts of their schools are cold, certain parts of their schools are hot, and also you have this amongst throughout the district. So now that we're fixing only on this one school, my question is, why aren't we doing this in several schools at this time? Because it seemed like this was a serious need versus want. Like this, I'm not doubting that this is possibly a need, but this is not just a need in one area, and we're doing one building right now. I know my constituents may be asking me, okay, Mr. Smith, well, I saw where you made the motion to do H.E. McCracken. What about the schools on this side of the Broad? You know, or where are we at with those air conditioners, and how are we doing that? So you know, you know, moving forward, these are some of the things that have been in question prior to now. But I think that it is very valid due to the fact that we're pushing one school at this time, and we're fixing one phase of their school, and not all at the same time. So I mean, you be coming back to us again for the same school, and are we going to pick that? Are we going to pick that wing first, or are we going to go to another school? What does that look like?
It's a very good question, and something we'll be talking about when we bring the 8% to the operations committee, April 9th. Does that sound right? Okay, April 9th. And it's all about prioritizing the money. Unfortunately, we don't have enough funds for all the HVAC needs. So we have to prioritize it and also look at what we can schedule in the summer and realistically do. Those are barred units, and I don't remember how many classrooms are at H.E. McCracken, but you may be talking about 30 different units, and it's hard to get all that in the summer. So we had to prioritize what we have funding for, what's in the worst shape, and what can we get done in the summer. I would love to have all the money and funding to do it all, but that's just not where we are.
So it's safe to say that the book that you pass out, that's very intentional and tells, you know, basically what we're doing and what it looks like at the economy, an autumn, basically an autumn list of what needs to be done. Do we not have that list in that book about what school should be done next and what that look like? Is that workout not in that book?
Oh, yes. Well, it's not in that book, but it's what we'll bring to the operations committee April 9th.
Thank you for the questions.
No problem.
Okay, it's been properly motioned and second. All in favor, vote aye. Aye. Opposed? Ms. Hay, Mr. Gordon?
Hey, I.
Pastor Gordon, aye.
Okay.
Mr. Chair, second motion. I move that the Board of Education approve the purchase order from New Idea School Supply Company for the furniture purchase related to the rebuild of Hilton Head Island High School Phase 1A, which includes the new 3-story building addition for a total amount of $1,547,649.83.
I'll second for no problem. You can have it. It's your school. No problem. I'm a team player. Get at it.
What's your name again?
Okay, all right,
Yes, sir.
so it's been properly motioned and second. All in favor? say
Just a
aye.
quick question
Mhm.
before we do that. Just understanding that this was budgeted prior to today. That the money that's coming for this has been budgeted in the referendum. So this is referendum money going to this money already allocated. Is that correct?
Yes, sir.
Yes, sir.
Yes, sir. It's within the budget and we're ready to go.
Thank you. So listening to the taxpayer, I'll definitely support this. Thank you.
Okay, all in favor? Aye.
Aye.
All opposed? Ms. Hay, Pastor Gordon?
Hey, I.
Pastor Gordon, aye.
Okay. that's unanimous.
Mr. Chair, that concludes all business coming out of executive session.
Thank you. I believe,
Mr. Chair, I have an announcement.
yes,
I'd like to
sure.
make.
Mhm.
Last night, May River High School hosted the annual BCSD Honors Choir with over 135 students in attendance and a full house of parents and guests. Students received a standing ovation for their performance yesterday. Congratulations to our schools, parents, teachers, and students.
Outstanding. Well done.
Everybody
Okay,
has at their table the BCSD Student Art Show Directors Reception on Friday, April 24th.
and, okay, fantastic. All right, and unless there are opposition to adjournment, so by unanimous consent, thank you all.